1, 2, 3, sound check. Ideas 2025, investment opportunities and challenges in the global market, September 3, 2025. Hello, conference, part of Astana Finance Days, investment opportunities and challenges in the global world. 1, 2, 3, 1, 2, 3. Hello, 1, 2, 3, 1, 2, 3. I have a dream, a song to sing, to help me cope with anything. Hello, sound check. 1, 2, 3, 1, 2, 3. 1, 2, 3, 1, 2, 3. ITS Ideas 2025. Delaware, Kazakhstan, BS Media.
Availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS.
Более 3000 инвестиционных инструментов, доступных на площадке.
ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news
its ideas and projects and objectives that we set for each other. For a rather short time, ITS has done a great amount of work. We launched our own infrastructure, including depository and clearing house. We are actively deploying new instruments. We're engaging new customers from Kazakhstan and IFC and new jurisdictions, new continents. And we will be happy to welcome every new participant, even here from different countries. We're actively working on new projects. We have more than 3,000 products which are actively traded, more than 300 ETFs which are traded in its entirety on ITS. And we have very interesting two indices, ITS World and ITS Sharia. And for these two indices, we're actively developing Islamic finance, and we are the active members of the Islamic Business and Finance Association, which is established under the AIFC auspices. We connect new markets. We will have very interesting speaker who has intentionally came here to Astana. It will be a separate session for him to share his experience, share his vision about the development of the Indian market, rapidly growing large market which attracts global interests. And we're going to tell how and when we're going to launch the market, which would be available in ITS for all the members. Prashant Kotari will be delivering his presentation here. We'll have a few separate sessions. We will talk about macroeconomic overview, including regional aspects. It will be a separate session on growth factors. We will have another interesting session in a new format, very interesting format. We will convene brokers, people who carry out researches, and the new research will be presented on the retail market of investments, and we believe that this would spur new investment ideas. Our conference is entitled ITS Ideas, and I believe that we will leave this conference with new insights, new optimistic forecasts, and new products. And for the welcoming remark, I'd like to invite to this stage IFC Governor Rinat Bektorov, please.
Ladies and gentlemen, this is my pleasure to actually welcome you all on this new, so far, event, ITS Ideas, the event that gathers many professionals, many experts in developing capital markets where we can discuss new ideas, development of our market. Today, as we all know, the capital is important to develop our economies, but the difference and the competitive advantage comes from innovation, from openness to innovation and openness to collaboration. And I believe that the ITS is a good example of innovation. Chingiz has already mentioned that they have few ETFs that are quite popular, and they were among first participants of Astana International Financial Center to launch actually ETFs in our jurisdiction. This year was quite successful, I believe, for Astana International Financial Center. We had many instruments that we call, if not first in the world, but first in the region. You probably heard about the first ETF on spot Bitcoin, first dual listing on Hong Kong on AAX, and many other. And more new instruments would be coming that will enable flow of capital to our economy, to the economy of the region. So again, I'm very happy, and it's my pleasure to be at this event to discuss the ideas. And of course, I'm grateful for the organizers, for Roman, Chingiz, and their team, and of course, Mr. Turlov for supporting, for creating this event where we can discuss different ideas. And separate welcome to your special guest, Mr. Kothari, who is the CEO and CIO of Alpha Alternatives, to discuss the Indian market, which I think is a very exciting market, big economy. When I discuss it with my Indian friends, I always say, like, India is geographically so close to Kazakhstan, but somewhat economically a little bit more remote. So I think we need to put effort into connecting these two markets because, again, I believe there are a lot of opportunities. I also know that the Federation of Eurasian Exchanges, some of the members are here. Again, separate welcome to all of you. You all know that once I was a CEO of Astana International Exchange when we joined FIAS, so FIAS is also dear to my heart. Welcome you all. I hope you can all enjoy Astana International Finance Days as well. Again, congratulations with the opening of the new business season. I wish you all good discussions, collaborative ideas, and growth for your businesses. So thank you. Thank you, Chingiz.
Thank you, Governor, and wish you and your mighty team all the success for the upcoming Astana Financial Days. With great pleasure, I would like to invite our board member. Большим удовольствием я хочу пригласить на сцену.
I would like to invite the member of board, ITS, Roman Gorunov. Dear colleagues, it is a great honor for us this year to launch the program of Astana Financial Days, AFD. I would like to thank Rinat for having such a good collaboration growing and overall for the support that we can observe on the side of the regulator. I believe that success of ITS is based on AFC success, and what we see, the development that we observed over the past 12 months, we can see the steady growth of trades, connecting new products, new customers, which creates a new quality of international financial center. We believe it's just the beginning, and we have a lot of ideas, and it is our pleasure to know that these ideas could be implemented together. For us, the platform consists of market members. I would like to congratulate all of you personally and online. I believe people will join more during the day. Those who take courage to take the first step, to take the first journey, because the forerunners are challenging themselves. Usually people like to come when everything is already set and built and go on the well-established road, but the pioneers, the forerunners are the ones who gain the most success. And the conference, I hope, is another additional step in our partnership and cooperation. We try to make the conference very content-rich, making it more attractive for the participants from the perspective of exchange of experience and sharing new sites. I would like to underscore as well that today or tomorrow we will present in the market new products, single stock ETFs. I believe that it will happen today, but our colleagues from AX, if they can, to list their papers today, then if not today, then tomorrow. Well, during the first plenary session, we will hear the news. It's kind of an intrigue. It's kind of a suspense. And our Indian speaker will be here for a purpose, because by the end of the year, we're planning to add into our assortment of single stock ETF a new security, new stock. It was the first case of giving an opportunity to trade Indian securities, and we know that Indian market is very large but somewhat closed, and there are few ways through which to connect the international investors to this market, and we believe that we will build such a road as well. So thank you again. I hope you will have a wonderful day and evening too. But before the evening, we have to live the day through and work a bit hard. Thank you so much. Have a good day as well. Thank you so much, Roman. Dear participants, we have online broadcasting or live streaming, and you can get connected to our Instagram, social media, and YouTube channel. All the sessions will be available in audio and video record, and we will start the first session, which I find the most exciting. For the moderation purposes and inviting all the participants, I invite Askar Yelemesov to this rostrum. Good morning, dear colleagues. It is my pleasure to see so many familiar faces for so long time, and new faces as well. I believe that these faces would become more and more, as well as the AFC and IX and ITS will be developing. And with that, we can request our speakers, esteemed speakers, those here, to take their seats on this stage. I don't think that I need to introduce, however, Timur Turlov, Yunus Nikolai Chi, famous strategist, equity strategist, well-known expert in macroeconomic, Asia Sarsimbayeva. She is the chairman of the board of Institute of Economic Research. Let's have some minutes about house rules. So 5 to 7 minutes for each speaker, and 2 questions from me as a moderator and 1 from the audience. And then we will spend more time to general discussion, during which we will have exchange of opinions between the speakers on the panel and the audience as well. So the topic is on the screen. You know this very well. Global macroeconomics and key financial market trends in 2025. And oh, my apologies. We have 2 presenters who are connecting online. I didn't see them on the screen, but Dmitry Dolgin, chief economist of large European bank ING for CIS, and Kyub Shinik, who is the founder and director of Zera Kotter University. So, our pleasure to see all of you. So, we start our session, and the first floor goes to this topic, how investors get adapted to the volatility of the market. Well, thank you so much. I remember at the beginning of this year, when it was clear that Donald Trump is about to win the elections, and people were joking that the year would be very, very volatile, extremely volatile. Well, this is quite funny, because I wouldn't say that the year was awfully volatile, well, at least so far. However, quite a few sudden events took place, and there was an outburst of volatility named Liberation Day, which Trump made for all, which risk investors and many others paid a fortune for. And then it was more forecastable movement, but the recent years experienced very high volatility, and there is an obvious observation among the professional traders: the higher volatility, the better to gain, because investors make rather a lot mistakes. More emotions come in the market, wider spreads, higher uncertainty, which results in many more opportunities, especially for those who start acting in extreme uncertainty. As a matter of fact, are forced to take higher costs rather than those who act in the conditions of stability and forecast capability. And the volatility exists in the exchange market and public debt as well. And the market of public debt is way too big as never before in terms of size and relative volume. If you look at the global market, it covers every country from Kazakhstan to the United States. The market of public debt is getting deeper and deeper and larger. Public debt is accounted to the balance of the developed countries, national banks, and still the investors retain the bigger share of such public debt. And when the central banks started changing the interest rates after the money, like 15 years, were for free almost for everyone, then there was a lot of volatility as well, which is still ongoing. And per se, many investors now try to assess the cost of public debt and what should be the profitability for certain time horizons. And as we have seen, investors, like in 2021, seemingly did not believe that the public debt, the rates for the next 5 years would be way above zero, and they were. And the change of price for midterm, let's say 10-year notes, the profitability on developing countries went up 100 basis points, which resulted in volatility of dozens of interest rates of the price of such notes, which result in almost a crisis of American banking system when the Federal Reserve launched a new good program of refinance, giving money to banks for the securities, not on the market, but face value. And you had bonds which you bought for 80% of face value, but you could take the loan for 100% of such face value. And this, to a certain extent, helped to reduce the panic in the market. And central banks, again, demonstrated that they can be actively involved in trading, they can save the players and certain harmony and growth in the debt market, exchange markets, price stability, which is the priority. And all the investors keep having in the mind that unlikely anything bad would happen in their finance market. And if happens, then the central bank will save all us again. And the central banks will never been actively involved in the trading of debt and exchange market as they did over the past years, starting with COVID and the latest events which we observe in the developed countries over the past few years. In this respect, it is interesting to know that developed markets used to be believed that European markets, Japan, US, with a large free market and a few interventions of regulators into the process. But in the developing markets, like our country, countries of Southeast Asia and other regions, the regulators have been involved in the markets more, influencing more, including monetary regulators. But if you look at what's happening over the past 15 years, it seems opposite. Our regulators are not intervening. It seems they less intervene into the process of trading in the markets versus the developed markets. So in the developed markets, the regulators, they're intervening into the yield curve and dictating the market how it should look like. However, in many markets of the developing countries, in the developing markets, strange enough, but we observe diverse conditions. For instance, here in Kazakhstan, if you look at our yield curve in the securities, for 7 years you can borrow to the government for 17 interest rate. It's a flat yield curve, which means that central bank will never win in terms of midterm inflation, and it would be rather high. And this tells to the fact that our market players do not believe in anything. It could be the case. And again, you should note that this can be both a mistake of the investor, which undervalue the huge market opportunity they have, because the central bank, obviously, in our country, the national bank in Kazakhstan, would reach the inflation goal, that the yield would be extremely high. We can buy and win X2. So re-evaluation of these securities would be very, very high. And let me reiterate that the era of high stakes will stay with us for long. Very weak national currency, high inflation would remain and this may not necessarily be attractive for investors. And investors have to answer this question to the right and to the left. This would mean very high material stakes that you need to take. You can earn a lot or you can lose a lot as well. And quite surprisingly, such transactions with no risk assets such as national public debt or debt of national companies, they, for the first time, turn into high volatile. I mean, the price change would be measured in dozens of interest rates.
So if the inflation goes down, they will grow 10 times, but if not, we will see a huge devaluation of the national currency or other things that will be quite symmetrical reflection of a situation. So we see that investors, we have to mention that, on one hand, the US still is the most attractive capital market. If we look at the entire capitalization figures, US is leading here. They still have figures which are quite high, more than 350 billion inflow, which is record high. So basically, the rate of inflow is the same because liquidity is high. They have something to trade. Infrastructure is huge, and the open capital accounts. So we cannot say that we all have open capital accounts or moving in that direction. Many countries close or make it half open or half closed or fully closed capital accounts. Although China is a great economy and their capital account is neither open nor closed. So they make it partially open from time to time to regulate their internal processes in the economy. So we are living in very interesting times. Regional markets, and in general, we understand that many regional markets get more saturated, population is growing, financial markets are getting bigger, and the Kazakh financial market saw significant transformations in the last 10 to 15 years. Looking at it objectively, we can say it's one of the few markets that grew a lot in terms of its structure, in terms of its depth, and still it has unique potential. We are the only Central Asian country with the investment and credit rating and open capital account. So, and the capacities of the AFC with the common law and independent courts create grounds for better trust to brokers and other actors. So the progress we are seeing in our country in terms of national market development and capital hub, it should get even more promoted. And this process is taking place almost everywhere. Many regional markets grow, few markets die, but we are growing faster than the others. And we have all chances to get X2, X3 in the future and have a strong position. Thank you. Let me ask you a question, a moderator's question to the first speaker. So, against this background of a growing turbulence we are seeing, what could be new strategies that investors can employ to respond better and to understand the risks better? Well, from the top of my mind, the access to ITS is a cool instrument because it's a gateway for multiple regional players to get access to global international markets, access to great international instruments, opportunities to trade in Asia, US, Europe, to get access to various derivatives globally. And for a small or a medium-sized player, it's very difficult to get access. For instance, access to clearing houses is limited because people are not likely to work with small regional players. They should start with like millions. But with ITS, you can get access to the global liquidity hub where we can analyze our players, onboard them, and I'm sure that this platform will see a lot of success. And the tools, the tradable notes, the ETFs, ETNs, and others, derivatives that will come next, the currencies that we are trading, it's all a great toolkit to manage multiple things. So one of such interesting tools that could be in high demand in the nearest future is currency derivatives and public debt derivatives in Kazakhstan. Because in Kazakhstan, the market is big. Public debt market is also big. So it's quite logical that such tools can come and be really attractive for many investors. Any questions? So people are not courageous enough. So let me give the floor to Dmitry Dolgih, ING. Hello, good morning. I hope you can hear me well. Thank you so much for your kind invitation, for this opportunity to talk about one of the global issues. And let me take Timur's speech as a basis. So let me elaborate on it and discuss how the global markets events and Liberation Day, customs duties, actions of the US government may impact the global role of USD on global markets and what opportunities it creates in terms of multipolar world. I've prepared a few slides. I hope you can see them. I'm sure you do see them. So of course, it's difficult to tell everything within just few minutes and few slides. So let me focus on the latest events, like protectionism by US, how it affects the de-dollarization globally. So, in order not to keep you waiting, let me share the main message. Higher customs duties for bigger trade partners will have implications for the global role of USD. Most likely, it will streamline the de-dollarization globally, with two channels. First channel, international reserves, and second channel, trade and use of currencies as means of payment and the contracts. So probably USD's role will diminish and the role of other currencies will get strengthened because the biggest share of customs duties, like 30 to 50%, are against such countries as Brazil, India, China and Switzerland. On one hand, these countries have huge and quite diversified international reserves. Central banks have big reserves, and they have a luxury to diversify their international assets. And besides the liquidity requirement for which you need USD, they also have so-called investment reserves that can be diversified, meaning investment in different types of assets. So, why these countries are in focus? For these countries, US as a trading partner is as important as the other one, Eurozone. For China, 13% is the share of both US and EU in trading with China. And when one of your international partners offers worse solutions, then the other partner may improve its position, meaning that it can have implications in terms of foreign exchange structure, so currency structure. So the key beneficiaries of de-dollarization were other currencies of developed countries, including euro, but not only euro. In many instances, it's because such currencies they have very developed debt market, and therefore their high share in trading flows is supported by presence on international debt markets. And this means that there is infrastructure to use the currencies, but it doesn't mean that currencies of developing markets don't have potential. Potential they do, but this potential is rather long-term, and it will depend on whether the developed countries can make their markets better quality and deeper. So the perspectives of de-dollarization are not evident yet. There are still obstacles for de-dollarization. We shouldn't bury a dollar too soon. It plays an important role. One of the advantages of USD is big debt market, which is used as asset by other markets. And USD is still very important in commodity trading, especially in the Middle East. It's very popular in the countries of Middle East. And there are no strong alternatives, even Eurozone, even Euro, although this is the second currency, still it's way below dollar. So a couple of words and few details about international reserves, and then we'll talk about trade. If we speak about the foreign exchange reserves, FX reserves, why I'm speaking about it? De-dollarization is very visible here, and it's a long-term trend. On the graph on your left, you can see how FX reserves continued to de-dollarize. And this trend is quite stable. Since the 2000s, the share of USD in allocated reserves dropped 13%. And this trend can jump up and down between the quarters, but it's like the temporary and due to interventions. But in general, the general trend is de-dollarization. Given that there are issues with the sanctions and fiscal sustainability of the US, people have doubts about it, doubts in quality of assets over time. And protectionism adds to that. If we speak about the beneficiaries, for long-term perspective, just to give you context, on the graph on the right, you can see the change in the shares of non-USD currencies. You can see how FX reserves distributed. So here you can see that all grew besides euro and Swiss franc. And euro is still ranked 2. Its share is about 20%, with the others to follow. Key beneficiaries were other currencies of developed countries, non-USD currencies, Canadian dollars, pounds, and Japanese yen to some extent. The developing countries' currencies, RMB and others, they grew, but not as much. Because in the field of FX reserves, there are high requirements to the quality of assets, limiting the potential of the others, non-USD currencies. So if we see the current situation, as well as the perspectives for the future, I'll repeat myself. The unfriendly approach in trading policy against the countries who have 43% of international reserves, Brazil, Switzerland, and others, and have diversification potential, it's a signal that most likely de-dollarization will continue. There are limitations. Limitations are among smaller holders of reserves, 30% of all global reserves. They don't have big opportunity to de-dollarize. So if we speak about central banks, if you speak about oil-producing countries in the Middle East and Norway, of course, they naturally lean towards dollar. You have a couple of minutes left, Dmitry. Give me just 1 minute. So, in trading, we don't see any confirmed signals of de-dollarization. USD is still strong, as well as euro, but other currencies don't show signs of progress in the last years. So it's clear that USD has got certain privileges which may not be related to trade and share of US in the global trade, but still important. So let me say that over the last 5 years, USD grew its share in the global trade. You can see it on the graph on the left. So they leveraged the opportunities because of Brexit, because some of the trading volumes were reallocated from the UK to the US, helping dollars on the global market. But recent events, the tariffs, or should I call them customs duties, for BRICS countries, basically, and Switzerland. So this new customs duties may lead to reallocation of trading volumes to the other more attractive places if the euro zone will use it effectively. So there are perspectives for further de-dollarization, and key beneficiaries will be most likely other developed countries.
Thank you so much for a very exciting intervention. Let me ask you an immediate question. On the background of what you presented, how do you perceive the perspective of the currencies in BRICS member states, I mean larger ones, BRICS member states? Thank you so much for this question. I'm taking this opportunity to demonstrate another slide, which I prepared in advance. No, well, I didn't want this actually. So, there is a lot of numbers, but I will not read them out loud, but let me highlight the key thought. The key highlight is that BRICS member states, starting with countries and then followed by currencies, so BRICS member states have a larger potential to influence the de-dollarization process and change the structure of currencies in the markets. But if BRICS member states can promote, advance their own currencies, I mean, offer their national currencies or offer one synthetic like yuan as a serious alternative to the dollar, well, this seems to be a long perspective. How can I justify my thinking? How BRICS can influence this process? So BRICS account for 43% of global currency reserves, which is a lot. For BRICS, it's around 20% of global trade. It is more than Eurozone or US separately, and especially BRICS member states are very authoritative, especially through Russia or United Arab Emirates. In the trading in commodities, the share takes up to 40%. For the developing countries. And it's clear that the behavior of these countries in these areas is influential. And let me say that in order to offer their own currency as a fully international one, it will require another component, which is high presence of the in the debt market. And as Timur says, to which I agree, that debt markets in developing countries, including BRICS and Kazakhstan, among other things, they are growing rapidly, but let's remember that they grow with a low base. For BRICS, it is about 5% of external debt and only 3% of international debt securities in the world. For your currencies to become actively used globally, you should have very high debt. So you have to offer something as an asset. And until now, despite all the challenges, US, which has 25 trillion of treasuries, Eurozone, which has 11 trillion of euro debt, I mean sovereign debt, they have enough depth to have a higher trade share in trade aligned with the high flow of finance. I was quite optimistic about BRICS currencies, but let's note that it is a lengthier process in the remote future. Thank you so much, Dmitry. Dear colleagues, do you have questions? I mean, colleagues from the audience, I see a hand raised. Can you pass a microphone, please? You will receive a microphone. Please stand up. It would be easier to see you. So one question from the audience. It's a question, 20 seconds. Just briefly introduce yourself, where you're from, and just your question, very short. Hello, Georgi Saev, Audio Capital Management. So you made your presentation based on the official statistics of SWIFT and then official statistics of reserves. On SWIFT, it's clear the trade in Russia with external world went away from SWIFT and many other countries. There is quite serious question on how it's relevant anymore for reserves. There is an opinion of esteemed Western expert that Chinese debt is reduced to $2 trillion, undervalued to $2 trillion. Do you think that official statistics in terms of reserves and trade flows should be trusted? And if no, then what is your estimate, more realistic estimate, against the all the events that are happening now? Thank you so much for your question. Well, indeed, I will start with SWIFT. Well, because of time constraints, I didn't mention this in my presentation. There are issues, not to SWIFT. It's not limited to SWIFT only. I mean, the SWIFT is not the only platform which provides for transfer of financial messages. There is an internal issue related to changes in the methodology in 2023, and we know that China is developing its own payment system. Undoubtedly, it's clear that Russia is disconnected from SWIFT, and there is European platform where the currency structure would be different, so somewhat different. Well, having said all this, if we compare in terms of transaction volume, SWIFT and all others, so far, the scales are incomparable so far. With certain extent of probability, we can still use SWIFT as certain indicator. Well, not in absolute, like dollar has 10%, 50% of share, but it's like indicator of trend, which shows if not growth of dollar, but retention of its position. And this can be explained by the trade geography and shift in the pattern of trade from goods to services and on other indirect indicators. And de-dollarization process in trade is not that obvious like in other areas. For these particular purposes, SWIFT can be used, which has quite user-friendly statistics with quite significant share of openness or disclosure. As for the reserves, well, these statistics by IMF, I know that there is some manipulation or speculation that reserves of China are undervalued. But for me, in terms of scale of challenges, let me remind you that apart from reserves, which in total amount to $12 trillion, there are sovereign funds which are not part of these statistics and which in its totality globally will reach around 15 trillion on different estimates. And significant share of these sovereign funds fall on China as well. And this is where you can take few more $1 trillion, and the currency structure may change, may vary a little. But certain sovereign funds in some countries, like in Norway, they are more transparent in their disclosure of information. And this tells to the fact that there is a certain trend or some preferences remain to dollar. As for countries of Middle East, well, it's obvious that the preferences to dollar remain high in countries where the exchange rate relates or linked to the dollar. And this is quite important additional thing which you referred to. I mean, what is the size of the reserves in China? But I would rather say that even if there is an additional trillion, it's a lot. But in terms of Federal Reserves, it's still a small amount. But if you compare it to the overall amount of assets under management, 130 trillion, well, it will not affect the overall situation. Thank you so much, Dmitry. A very interesting discussion, and I believe in more active engagement with other speakers. Let me give the floor to Asyel Sarsenbayeva. Dear ladies and gentlemen, let's talk about the role of developing markets in transformation of global economic architecture. A lot has been said about the previous speakers. I will not repeat myself, as it was mentioned before. We live in a very interesting times. The world is on the crossroads, and the dogmas of economic rules are challenged, and they give in to the new growth points. And in this situation, the key role is to build the new architecture of global economy. Let me give you some numbers. According to the International Monetary Fund, in the end of 2024, the 78% of global economic growth came from emerging economies. I mean, this number again confirms the previous bullet points. From a perspective of developing countries and developed countries, comparing April data, in June, IMF revisited their forecasts on improving both categories of countries. On developed countries, 0.4% basis points, which gives a positive impetus on the India and China, more favorable towards China. We expect growth around 4.8%, which increased 0.8 percent points in India. Developed countries, well, there is 0.1% increase by IMF. Expected growth is 0.5%. Well, of course, you cannot compare these numbers directly, but this is based on low base. In terms of developing or emerging markets, well, it's obvious canons. There are a few factors which keep affecting the situation in the developing and the more emerging markets. Let's talk about forex rate. Over the past few years, there was the strict monetary policy from 0.25 to 0.5%. We see increase in the rate. How this tells on the developing markets? There are a few channels, financial channels in the first place. Increase of FRS, it will result in outflow of capital from developed into developing. This will result in higher borrowings to developing countries, and for many developing countries, it's a very painful thing. Well, as an implication, it will result in strengthening of dollar and weakening of the currencies of developing countries, increased inflation risks, which will result in strict monetary policy by the central banks of all the countries. I will not talk about the role of dollars in all the reserves. The previous speaker mentioned this quite substantially. So what we have to do now? We cannot avoid a situation, what's happening in Africa. Africa is the market of the future, and it's future of the developing markets. By 2050, it is projected that the population would reach 2.5 billion people in Africa, making Africa a key consumer and labor market everywhere. So what the developing or emerging countries have to do? It's regionalism of financial flows. Over the past few years, we observe how combining in the region is growing. I mean, the existing associations are getting reanimated, if I may say so. They are getting the second life. And as it was mentioned about BRICS, 28% of the world's GDP. And in terms of population, it's almost 50% of the world population. De-dollarization, well, I will not dwell upon this. Let me just highlight that as part of BRICS, we do not expect that something rapid shift will happen towards rejection of dollars and using local currency, but there are cases like China, Brazil, Saudi Arabia are taking transactions more and more frequently in yuan, and certain trends towards regionalism. It's not just trade, but trade, incentivizing trade in local currencies. Shanghai Cooperation Organization, 27% of world GDP. Africa, free trade zones are growing rapidly in Africa. In terms of Asia, ASEAN and RCEP create alternative trading centers and investment, alternative hubs for trade and investment. And now let's get back to the investment into the future and global trends. Well, it will be difficult to highlight 2 or 3 factors which affect the growth of developing markets, but we cannot disagree to the fact that development of technology facilitated fast growth of GDP in many emerging markets, because emerging markets are part of the global value chain, in global supply chain, and apart from this, to date, the emerging markets are becoming platforms to deploy the technologies. I mean, they stop being just intermediaries. They adopt new technologies in-house, like India, which has repeatedly been mentioned before, creating a UPI and settlement centers, like in Africa. They have fintech rapidly growing, like in Kenya. M-Pesa Bank provides access to a lot of population with financial services. I mean, the technology development is becoming a driver for emerging markets, well, not from the perspective of global value chain only, but rather a key integrator of all the technology innovations. And of course, let me talk about investments. According to UNCTAD, the global FDI reduced 22%. The key decrease in Europe and 23% in USA. 0.2% increase in the emerging countries. Africa observed 75% of increase in FDI, which is prerequisited by large investment projects. Asia remains with a lot of investment despite their decrease, like 3%, and dramatic decrease in China, almost 30%. ASEAN investment inflows increased 10% and reached a record of 225 billion. And for ASEAN, it's a very interesting case. Out of 10 most significant technological breakthrough, 8 come to countries of Southeast Asia, and around 78% of new investment policy measures were aimed at supporting investors, especially in developing countries, reaching almost 90%. However, in emerging markets, we observe since early 2025 certain protectionism policy, which has repeatedly been mentioned before. If developing markets focus on simplification of investment attraction through single window or streamlined authorization processes, developed countries, they introduce more monitoring controls or the FDI inflows, which affects and will affect further down the road the transfer of investment to developing countries. Well, as we here in Kazakhstan, it would be wrong to avoid explaining Kazakhstan's role in all these global changes. We decided to analyze the global value chain, GVC, and Kazakhstan is ranked 12th among 71 countries on the global value chain participation index, which is rather a good indicator. However, indicator is built from 2 components, direct forward and backward linkages. To a larger extent, we have forward linkages, so export of raw materials to be processed in other countries. Backward linkages, where we purchase commodity, process, create value added, and then export. Top 10 buyers of added value. You can see on the slide, China is leading, and we decided in this chart use China and metallurgy. Export of domestic metallurgy to the most technological complex production facilities in China. You can see construction as leading, then electrical equipment, machinery and equipment, computer, electronics, and equipment, car, and so on. These are goods with high value added. I mean, Our recommendation and overall what Institute of Economic Research is doing goes this direction: develop a global value chain, build processing facilities for higher value added, and we analyze these estimates, and they're based on input-output table of OECD of 2018. The updated data were released just recently, so we are recalculating all these numbers. Maybe the situation would change, but insignificantly, I think so. Thank you so much. Thank you so much.
Thank you. This reminded me of the thing that there are financial markets, debt markets, but also in-depth trends such as structure of population changes in contributors, and factors driving the economic growth of different regions. I've got a question to you. Once again, coming back to the developing market thing. So BRICS countries, according to your presentation, SEO and BRICS countries have a big share in global economy, especially in terms of new growth, economic growth, and population figures are outstanding. So don't you see any structural contradictions? So although those countries are big players on the international market in terms of the size of the economy and their value added in economy, but you've heard the other speakers, their role on the market is not very big. Role on the international markets, yes, today we don't say that there are any big shifts in terms of the role of developing countries getting bigger than that of developed countries. There are some improvements. Sometimes RMB is used more, but we are not expecting any quick de-dollarization and shift from developed countries to developing countries. That's not likely to happen soon. And there is an indicator called GDP according to the by 2030, it will be 65%. I'm talking about the indicator. Purchasing parity. So now we're expecting that it will grow 5%. So the situation is changing, and the developing countries so on the global arena, the situation is changing. The countries are merging closer to each other. So we are seeing this convergence, and we are seeing that BRICS SEO countries, they will grow their presence. It's a process that requires time. Dear colleagues, any questions? My name is Bakhtiyar. I'm from my global company. I've got two questions. One for Asil and one for Timur. Asil, in the last 2 years, we're seeing a trend that the share of U.S. public debt in portfolio is going down, but the share of gold is growing. So in case of IFRS rate going down, what are the risks for the dollar as the global reserve currency? And long positions on gold, are they still relevant? Thank you so much. That's not our profile, but let me try to comment. Before 2020, there was a belief that stocks and gold are assets that balance each other out. One is less risky and one is more risky, but we have been seeing them going down and up together. So central banks We don't say that if they have more gold as they intend to rush to more secure assets. That's not a correct notion. So in Kazakhstan, the central banks grow their gold shares because our national bank has a right of priority of buying gold on a priority basis. So there are internal trends always that have impact on the growth of the gold share in portfolio. If you spoke about the correlation, like long positions on stocks and gold, on securities and gold. So long positions on securities is also not very risky, same as gold. They can grow together or they can go down together. Thank you. Timur, a question to you about ITS exchange. For Kazakh retail investors, it's very important to ensure the equality in taxation. New tax code was adopted, and Kase exchange offers some benefits for the local investors. Are you planning to include ITS in the list of stock exchanges where Kazakh retail investors would have certain benefits? Our task when we worked with the tax committee was we'd like to get the just taxation system when working with the international securities and derivatives. It's a key task, just taxation. It's not productive to demand the government and the State Revenue Committee to offer us tax benefits. We say that we need just taxation, fair taxes. So in the new tax code, we have the netting out or balancing provision for the brokerage services. The netting out between derivatives and spot market will limit the development of the derivative market in Kazakhstan. That's why we don't have the derivative market on the market in the country. I don't see a fundamental problem. AFC has got many instruments, including different funds, to help the investors. If they invest through ETFs or funds, they can enjoy tax benefits. But also, there are opportunities for the investors, both international and local ones. We shouldn't invent new tax benefits. We just need to make our taxation regime aligned with best standards. If we do that, it's more than enough. In the current world, well, it's better to pay 10 or 15% of your personal income tax than don't pay at all. In order to legalize your money in a meaningful way, because zero tax rate means higher risks in terms of money laundering. It's better to have small taxes than no taxes at all for you, finally. And you need to find a good compromise. As Mark Twain said, two things are inevitable, death and taxes. So thank you so much for your detailed answer. Now, let's give the floor to the international expert who is very experienced in the stock market. Dear Yunus Yenikolaichi.
Good afternoon, everyone. Firstly, it's a pleasure to be here. It's my first time in Astana. I had some slides. Could we switch over to the slides, please? Thank you. So, firstly, I want to talk about the main essence of what I want to give you guys at the end of this day. The main argument I like to present is that with the change, when we have, when the flow of goods are changing along with the rules that govern them, we're sort of seeing implications on both the macro and micro scale, meaning on the global stage, we'll be observing both winners and losers of this. It's been mostly a harsh year, similar to the past few years. What's happened is basically with sanctions, trade wars, and all these geoeconomic blocks forming, we've come to sort of a structural shift. And the main thing here is that this isn't just a one-off thing. We're sort of en route basically for a big change in our global commerce landscape. And I think we could mostly agree with the fact that right now we're sort of shifting from an integrated world to a more fragmented one. The only thing sort of up for grab here is that we're not necessarily sure of the extent or sort of the magnitude of how rapid we're going into this change. Firstly, let's look at some of these signals of geopolitical turbulence. In essence, geopolitical turbulence sort of signals itself through policy uncertainty, mainly economic. And going back sort of over the last few years, our main two shock events on this side of things were mainly the pandemic, and secondly, our sort of shock events in 2022, and recently sanctions, especially, tariffs. And what happens in this case is that we have sort of spillover effects, meaning money flows go to more safer havens, trade deals, especially cross-block trade deals, meaning from like the west to east, they sort of slow down. And most importantly, on like the micro scale of things, capital expenditure schedules get delayed or contract for most firms. Secondly, I want to talk about sort of the supply chain side of things. Here, after basically the two aforementioned cases we had, basically the pandemic and sort of our early 2022 event, we've sort of come to a point where our supply chain lines are more stable, and the main reason for that is that we're sort of in a more agile state, meaning our supply chain decision makers have turned to a more, they've sort of restructured their trade routes, and they're taking resiliency over costs. What I've liked recently from reading on this topic is that we've sort of shifted from just in time to just in case on our supply chain rhetoric. Hence, we're sort of in a more manageable environment in this side of things. And with the previous slide, we talked about, remember, sort of economic uncertainty. Normally, we had sort of a structural relationship with these two phenomenons, but we've sort of shifted away from that, and that's mainly because both the Western and Eastern blocs we see economically today, these two have sort of restructured trade routes, and we're more, especially with our close trade partners, we're mostly politically aligned. So we can't necessarily say that policy uncertainty would translate over to the supply chain, pressures. What we would need on this side of the argument is we would actually need sort of a, I hate to use the phrase, but like a black swan event. So it's sort of overused. We would need more of a direct power confrontation, meaning something a little bit more, if we were to think of like as a pendulum, we would need something a bit drastically more than just sanctions or tariffs. And also another KPI I really like to look at in this sort of geopolitical turbulence environment is merchandise trade volume, meaning things like cars and electronics. This here, we can see basically, as long as we have a stable business environment for the year, we don't have much issues with, especially for 2025, in regards to net merchandise trade volume growth, meaning as in like amount of goods. And that's mainly led by Asia and along with the rest of the world. We sort of have a low base from Europe last year, so the growth in Europe is sort of expected growth, if you will, is sort of exacerbated. But in general, if we have a stable case for our global economy, we should still be seeing world merchandise trade volume growing. But if we were to see sort of these idiosyncratic shocks, meaning like power confrontations, more neurotic cases of tariffs coming into play, we could see a downside case, and mainly this is led by North America, meaning the main decline whenever we have sort of direct sanctions or power confrontations and simulation cases. The drag down comes from North America. In Asia, yeah, we do see some contraction, but in like a normal case, we should grow in the vicinity of about 3% in trade volume. But when we go over to, let's say, a stressed scenario, most of the contraction is coming from North America and partially from Europe. We're sort of seeing the low base effect here, even if it's growing for the year. We'll see a contraction for 2025. And this sort of creates an imbalance, mainly some of these trade flows have to go somewhere, meaning this leaves room for more, as some of the speakers mentioned, sort of the developing countries, emerging market countries, and even LDCs. I ran out of slides, so I couldn't include another graph, which was important for this case, but LDCs also bring in a lot of important, they capture the demand from absolute trade volume decline from North America. Here, we're basically looking at throughput, meaning how much containers go through a certain port for a certain time interval. After the pandemic and other cases, most of the growth has been led by China. We sort of have this sort of regional momentum difference, especially with North Range ports. And for here, you can think of like, for North Range, we mean like European, meaning like Hamburg, Rotterdam. After the pandemic, we didn't see much growth out of here on an absolute basis. This is an indexed graph, meaning most of the growth, as I said, is led by China. And when we sort of exclude China, our container activity, sort of like the arteries of our economy, this is like a lead indicator, you can think of it that way. Outside of China, we're not seeing much real container activity, if you will. And sort of looking at how we sort of trade amongst one another. Again, I'm sort of benchmarking the pandemic because it's sort of turned into our benchmark. We were trading amongst each other significantly after the pandemic. We sort of had this directional relationship in growth after the V-shaped recovery from the pandemic, meaning Western countries were trading with Western countries, along with Western countries trading with Eastern countries. This was a directional recovery. But after our shock event going back to 2022, our inclination of trade has changed, meaning now we have sort of more of a inclination to trade within our blocks, meaning, let's say if we were to group China sort of on the east, China is more likely to trade with its nearshoring partners than they do with, let's say, a European destination. And overall, these have mainly two implications. Firstly is that in the developing market realm, especially for countries that are nearshoring or friendshoring, if you will, recipients of these countries are not just one-off cases. We're sort of in a structural shift in how we look in the world. And it might not be the most rational thing to sort of be on the pessimistic side of the emerging markets, especially countries like directly, if we were to name them, Mexico or like Bangladesh, especially Vietnam. It might not be the most rational thing to do to be on the opposite side of the trade, being sort of against the bull thesis here. And on the other side of things, especially for Europe, it's also not the most smartest thing to do, especially to be against the to be on like the optimistic side of things, meaning it's the more pessimistic case, especially with the structural shift in Europe, especially in industrials. Like, think of it this way: when we exclude defense out of European industrials, it's not a smart thing to be here. And I mean this in more of a visceral sense, not as in like a value trap case, like not in a direct finance way. It might be much more wiser to be on the pessimistic side of European industrials, especially, like I said, excluding defense from the industrial realm. And that's mainly all I have to say. Thank you for listening to me.
Very interesting speech. May I ask you, did I hear you right that you said that global market fragmentation will lead to inflationary pressures? Isn't it vice versa? I mean, like, just intuitively, I would think that it should lead to lower costs. What would you say?
I didn't directly reference that, but that's sort of the implication of, especially with decision makers on the supply chain side of things. They're sort of taking they'd rather have trade partners on their supply chain side that are politically aligned, and they take this as a decision factor in a much more intense state than they do with cost optimization. Meaning, these fragmentations in the global economy, they're inherently inflationatory, but looking at sort of like the counter argument, the counter thesis, maybe with some technological advancement over time, this effect can go away, but the structural shift to a more fragmented world, if you will, it's inherently inflationatory.
Quite interesting view. Well, let's come back to that point at a later stage when we have a discussion among the speakers and the audience. Now, any question from the audience? Егер қазақша сұрақ қойылса, Юнус бей меніңше қуанады, болады, аударып береміз. Кто-нибудь хочет задать вопрос нашему?
Anyone is willing to ask a question to our esteemed panelists, please? I don't see any hands raised. I hope to see a lot of hands raised. Well, I will not ask the second question. I have something to discuss with Yunus a bit later. Let's proceed with the last but not least presenter, Kirill Pshinik. I managed to drop an eye on his presentation, and I'd like to ask to spend more time on Kirill Pshinik's intervention, because I think that after his presentation we can smoothly move to the discussion part. Colleagues, the next presenter, Kirill Pshinik, CEO and founder of the Zero Coder School. Is he online? He was disconnected right now, or what? It happens sometimes. I saw him on the screen a second ago. Are you there, Kirill? Okay.
May I continue discussion with you, Yunus Bey? From what you said, and basically logically, what other speakers also mentioned, it seems to me, okay, Kirill, вы с нами?
Kirill, we can see you. Yeah, it's rivals doing this. You can take floor a bit more. We think that your presentation is very interesting. Yeah, right. I feel myself a bit uncomfortable because you discuss very global things, and I'm more on the practical side of things. I wanted to share my experience in using artificial intelligence. And I have a question to the audience. Can you raise a hand if you use AI, maybe a neural network, in your investment decision-making? If you show me the Zoom, I can see the hands raised. Around 20%. Great. Super. Okay. couple of words about myself. I'm CEO and co-founder of Zero Code University. We are the largest academy on AI training. I'm MBA. I'm a accredited qualified investor. I have been investing since 2016. I attracted a few rounds of investment to the Zero Code University. And I will not talk about global things. I will be talking about what we do. And the latest study by BlackRock, they presented a document. It's a study where they talk about alpha agents, which is a multi-component system based on LLM with 3 specialized agents which analyze fundamental, news sentiment, and price or volume assessment. So what is the breakthrough of this study, which is quite obvious that LMA and AI is used by hedge funds. The point is that BlackRock used baseline models like ChatGPT or other open source AI. And we are living in a time when AI is not something on super expensive, large solutions. You don't need very top-notch data scientists. Well, AI is accessible and affordable by any entity, small and big, hedge fund, and so on. And you can find this report in the internet, Alpha Agents by BlackRock. Well, the point is that it gives a competitive advantage in selecting your assets and investment outcomes, and it is built on very simple, basic blocks which are accessible to any individual. So what types of investment can AI help with? I guess that from your experience, you can give a lot of highlights. I'll be talking what I was doing in my company, well, stock market in the first place. It is important that AI here, well, I'm talking about the generative AI, like ChatGPT and other tools. It's not a tool which does a solution for you. It is a tool which helps to analyze historical data, report some fundamental things, analyze news feeds, and so on. And this is where I see these neural networks as a replacement to data analysts. I mean, a simple example, when you need to look through different reports, compare, I just call one of the autonomous agents. I will explain what is it a bit later. And it takes around like 5 to 10 minutes for an in-depth study, instead of hours or even days which analysts take to prepare the report. It's acceleration of your work. I wouldn't say it's better or high quality than live analysts, but with accurate setting, with accurate requests or prompts and language model, the results is comparably good versus people. As for cryptocurrency, well, same story. There are fundamental things which are worth of analyzing. Market and everything can be done by AI very easily. And if there is a quick trade with meme coins or something else, it's important to analyze the trends in Twitter and other social media. And neural networks can do this faster versus any person, because a person cannot read 50 tweets, 50 articles. Language model can do this in second. It's not about high frequency trading. It's about, conditionally speaking, midterm strategy, which can analyze quickly the essence of the text. Venture investment, venture capital investment. As an investor, I invest in some projects, and every week I receive emails with 2 or 3 projects to review for investment purposes. And this is where I spent a lot of time before using AI for analysis, because you don't want to miss any opportunity. But on the other hand, it's obvious that you have to look at the presentation, model, make a market search, find the founders, what they did. It took hours, and I just get rid of some ideas which maybe I missed. Now I can analyze any startup pitch quickly, and then I go to drink coffee. In 15 minutes, I come back and receive results with all the findings and outcomes and how it matches the investment harmony. And if the system tells it's quite promising, then I start due diligence, meeting the founders, deeper research. It really saves me hours of my time of good analysis, or hours of time of my analysts. And as for the topic of investment to real estate, well, a lot of is happening related to regulations. If you invest, especially in other country, if you buy some goods, some assets, which has unclear jurisdiction, in an accurate prompt, the AI capable of finding external sources, you can create a very good profile how well the asset is. Is it worth of buying it because of the price growth trends? Are there any internal or external risks? And so on. It's not a decision-making point. It's not an investment recommendation. It's analytical story which helps you make a decision more informed. What are the key models and analysis tools? This is where I'm explaining what I do myself. One of the discoveries for me, it's an autonomous agent named Manus of China. It's accessible from here in Kazakhstan. It costs little money, but it's a really good tool which, appeared just a few months ago in open access. You can use it, and it really makes a difference. I extremely recommend to use a demo version. Your job to give to analysts, try replace with Manus without even fine-tuning or very deep prompts. The findings are very good. So what's the trick? In 10 minutes, Manus can analyze 100 links, read 100 market research, combining it to one piece, building all the charts, infographics, collecting all the necessary materials, and materials, not just text. It's not just a study with the text, but it can analyze charts, some other additional materials if necessary. And it's important to know that Manus can autonomously decide what to do and where to go versus ordinary search that you can do yourself in the internet. Manus will be searching through the web, finding decisions, making decisions, and it's not one-off story. It's autonomous AI agent for you. I extremely recommend you to try it first. You can use API, you can get connected to external sources, and it is worth mentioning ChatGPT. Apart from baseline model, which ChatGPT 5 has, there are 3 models or modes which I like. GPT-5 thinking, any prompt, any request which requires external information or some analysis, I would recommend to use GPT thinking versus GPT Pro, depending on how deep you want to have your research. And this is a mode which helps to do the same with Manus, but on a lower or inferior level, I would say. I really like this for faster understanding of the market situation, for finding quick answers to my questions. I don't need a complex story, but I just need to find an answer for a specific question. For instance, I want to find an information about founder or an asset, or I need to understand to find the market situation in a given company where it runs its business, and basic things. It takes like few minutes to answer. And there is deep research. It's a tool for deep analysis, similar to Manus, but it's a bit inferior to Manus. But if you don't want to use different tools, deep research is a good tool to understand the market situation. There is another mode, agent. It's an agent's mode, which make it possible to access information or data not available via API. If you find something complicated, if you need to log in, enter your password, so agent can do this for you. It's autonomous agents which do not generate an answer, which happened like 1 or 2 years ago with LLM, which it is a model which helps you go step by step and then make decisions on this basis. How neural networks help in investing? It's kind of summarizing what I said. First is collection and processing information. Without neural networks, it would be weird to go. still you find information in the Google for decision making, just try neural networks. It will really make a difference in your life. It will help you find high quality answers. Creating an investment plan. Well, if you have, I don't know, a plan with goals, deadlines, acceptable risk levels, you can upload this into the autonomous AI agent. A neural network will give you different scenarios, different options and insights. It doesn't mean that this idea should be done. It means a brainstorming for you, and maybe you never thought of certain assets, and then you look them in different perspective, and then you take them. Asset analysis. You can upload your portfolio into the ChatGPT, asking a prompt to assess the market risk, internal positions, external positions, portfolio management, while similar, and machine analysis of a large array of information. I will talk about democratization of access to the technology. If 3 years ago, in order to launch a story with machine learning or complicated models which are capable of projection, very expensive data scientists would be required. There are few in the market. You can hardly find them. You need to support through infrastructure. But now, if you're a private investor who is willing to make some assumptions, you just go to a neural network asking for a code. And if you don't know what code consists of, I mean, it's a neural network that can do this better than junior or middle programmer. And you will have a tool to analyze information through a code without knowing what code is. It sounds like visionary, a bit weird, but the year 2025 is like this. You can code on the programming language without knowing what coding is and address your concerns with coding which you could never afford before. Now neural network can do this for you. You just need to master your skills a little how to do this, and you will open up new opportunities in using these tools. And in conclusion, it's important to know that neural networks can make a mistake. Autonomous agents, which are well set with accurate prompts, they can make mistakes rarer versus people, in my experience, but mistakes can happen as well. And the first thing to remember is to verify your data with reality. If AI relies on some data, just use the link and verify how relevant the data is. It happened to me a few times when AI selected outdated data and made decision on this basis. However, things changed. So I made a mistake by not looking at the date of the data and use few services. ChatGPT is not a silver bullet, especially those which do not self-verify, be it Claude or ChatGPT 5. If it's about very serious decision, try to use few models, get results, and then compare. It's similar to what you hire two analysts or 2 or 3 analysts, and they produce a report which you compare. There is a tree of thoughts in the world of AI. When you have few decisions and then you combine into one, and then statistically, the study shows that the AI hallucinations will decrease significantly. So this is the action that you can take to get higher quality results. And source of data. When you upload certain data to the neural network, of course you rely on official data or formal data, and if you can verify, you can do it before. For instance, you download a report, upload it as PDF, rather than asking a ChatGPT to find a report. Because AI may use some information which cannot be verified and make a decision on this basis. Kirill, you have 1 minute. And the last slide. And when you use a neural network, it doesn't matter what language you are uploading your document. If you have a report by Chinese company, Arabic company, or another company written in national languages, you can put it into one pile, and AI can make it possible to work with it without knowing this language. Neural network doesn't matter what language you are using for your purposes. In 2025, it is necessary to use AI. You learn how to work with AI. You can study in Zero Coder or in other AI Academy. It's a skill that you must possess. You should know how to use it. And if you dive deep into the story, you will have a lot of useful information, useful opportunities which are opening up this day. Thank you so much. I'm done. I read my presentation as fast as I could. I will ask Mr. Tulov to ask my question instead of myself. Well, thank you so much, Kirill. Very exciting presentation. Well, as a matter of fact, it is obvious then when AI agent starts taking a lot of decisions and more affecting the decisions which people then take for algorithms, it's always a temptation to be manipulated by these algorithms. When it's not a mistake made by algorithm through hallucination or wrongly interpreting some data, but there is a targeted attack, assault, which can make an influence on your data or sentiments, you name it. And if you have any thoughts how to counter this manipulation from AI, this noise and buzz around, of course you need to rely on official sources as a key prerequisite, but not only reliable sources can be used for decision making. Even reliable sources can obviously be optimized in a way that algorithm may give you particular advice or a tip, especially people who understand how algorithms are created, because they can change an order in their report. You can find in the official sources. So how you can protect yourself from this professional algorithmic abuse so that AI give you good advices, not in the interest of what is seeking for such information, but who is trying to make an influence?
Thank you for this great question. I can recommend two things. First, use fundamental models, foundational models, because we have basic models like GPT, Chat, Claude, and others that are programmed once. I think that for ChatGPT, 700 million active users per week. It means that there are basic settings. You can find them in the internet, and they are not showing the signs of any data abuse. If you are not using chatbots or external tools for analysis and you use foundational models, then there is not big chance, minimal chance of abuse. So I have the off-the-shelf blocks that I wrote myself for analysis. Neural network, it's a tool that can be set up individually. So this setting must be done by a trusted person or by yourself, for yourself and for your tasks. So my thinking is, if you get a foundational or basic model, if you know that there is no intermediary between you and the network, neural network, then there is a very minimal chance of data manipulation or impact. So we compare it with not the abstract process in a vacuum. We compare neural networks and people. So when you manipulate a person, let's say a system administrator or system analyst, I think it's easier to manipulate a person rather than this link between basic model and your settings. So these are my recommendations. Thank you so much. So the round of applause is to our dear speaker and not the entire session, because the session is going on. Are there any questions?
From the audience, пожалуйста. Может быть, кто-то из спикеров хочет еще задать вопрос?
Maybe speakers would like a question to an audience. I'm seeing a raised hand, so the audience is being waken up. Two questions to Kirill from the audience. Please introduce yourself. Artyom Klimov, Best Talks. Kirill, thank you so much for an interesting presentation. To elaborate on Timur's question about manipulation with data, how can you get protected against attacks from black CEOs who may manipulate the news? Are there any protection means? How you can protect yourselves against black CEO? Thank you so much. I mentioned the sources of data to be used. If there is an opportunity, it's better to use the official data. Use your official PDF reports and the models. They tend to choose more trusted sources, but sometimes it may happen that some external sources are still chosen for analysis. So you can build up your models. You can set them up and say, use the websites of official websites of companies. So it's about your prompting. There is no universal recommendation. So I'd rather recommend use your expertise and your experience in analysis. When you use a neural network, check what it gives you. If you see something strange, have a look why it happened and change your prompt, your settings. It's like a simple answer to a question. You can write in your prompt, use these websites, official websites. Don't rely on some SEO articles posted on external sources. And the model will usually get the correct data and give the answer using official data, but there is no 100% protection. Remember that. Colleagues, there was another hand raised. Hello, I'm Maxim Salmatov from the investment company. Kirill, very interesting presentation. Over the last 3 years of GPT existence, I'm following it very thoroughly. So my question is about the tools. Tools are very good for investments, but I'm interested in the trading part. What about traders? What about speculation with the signals in trading? Are there any tools being used by foreign companies on the basis of patterns, on the basis of news, where you have to give a signal or some indicators being used by bigger companies or international platforms such as TradingView? Thank you so much. I'm not an expert in technical analysis. I'm not following these solutions. But the BlackRock's study, one of the autonomous agent in decision-making tool, is based on situational decision-making. Read a study. It can offer some details. You can see the links into the literature. So if we speak about language models in neural networks, they are quite slow. For quick trading, probably you need other customized solutions, which take fast decisions with less thinking. So there is a balance you have to consider depending on your task, depending on the decisions to be made, how fast, how much information to be analyzed. So the advantage of large language model is that they can analyze a lot of information in short period of time. The GPT window offers 1 million tokens. It means 1 million words. And there are no other systems where you can upload dozens of reports of a company and get detailed information in few seconds, because for a person to read all the reports and to make decisions, it takes more time. So use this opportunity correctly. Sometimes it doesn't work well because a machine may fail to consider something, but the tool is available. You can work with it. Can we use it for trading? I think yes. but you need to see the cases. Second things I mentioned about the trading, it's important. Well, 3 years ago, before writing robots, you needed to know the algorithm, to know the best cases, how to code it. But now ChatGPT or neural network can help you a lot. Even without knowledge in programming, you can think about the algorithm, you can look for information, and you can ask writing different things that were not physically accessible to you. I cannot recommend you a specific solution because it's not my area of expertise. There is one more question from the audience to the speaker. Dear colleagues, we have 5 minutes only before the break.
Of coffee this morning. Не хочется быть последним человеком, который стоит между вами.
So one question, one answer, and then we'll thank the speakers, yeah? Mikhail Mirjanov, EK Standard. Kirill, my question, elaborating on what has been already mentioned, can you mention a specific case from your practice? What did you use and what you achieved? So I'm looking into the market of Thailand. It's a short-term strategy. I like long investments. So it was very difficult for me to understand the market of Thailand. So I did a deep research in the sectors I like, I invest there. And then for every company, I did a forecast and analysis, and I chose 3 assets which are better to me. Well, the profitability is not the case here. I bought assets 2 months ago. Profitability just didn't happen yet. But before neural network, I think I wouldn't do this physically. I wouldn't have enough energy to do that. So I think it's important that in your question, you are like telling a story, how neural network improved your figures. I'll give you an example. For instance, you go to someone's house as a guest. You cook food. What kind of dishes you use for cooking? So neural network is not a tool for decision making. So profitability decision is mine. But the neural network helps me to do it quicker, because in the past I didn't just have time or effort to do this physically. Now I do. About venture investments, last year in my company, a neural network helped me with the analysis and with the presentation. I wrote letters for investors, and it's a big process, like roadshow to look for investors. In terms of communications, the entire communication was done by neural network. It really saved my time. So these are the cases. Well, I cannot say that neural network helped me to choose the investments, but sometimes ChatGPT helped the others. And the decision offered was better than the ETFs, but I think it's a mistake of a survival error. Neural network helps you to work more effectively, but it doesn't replace people. Okay, thank you. Thank you, dear speakers, dear participants of a conference, of this session. Thanks, everyone. So, and I thank myself as a moderator. People are eating our food. Let's go there quickly. And let's talk to each other there.
Коллеги, ровно в 12 здесь...
ITS представляет новый продукт Single Stock ETF. Старт торгов уже в сентябре 2025 года. Что это такое? Single Stock ETF – это биржевой инвестиционный фонд, который повторяет цену одной конкретной акции, но позволяет купить ее частично. Как это работает? Фонд приобретает акции одной компании, например, Amazon, делит их стоимость на части, к примеру, один single stock ETF – 1/100 акции. Инвестор покупает single stock ETF как обычную ценную бумагу в приложении брокера. Цена всегда повторяет динамику базовой акции. Начните инвестировать всего с нескольких долларов. Владейте долями ведущих мировых компаний. Сформируйте диверсифицированный портфель менее чем за $100. Отличный первый шаг в мир инвестиций. Сканируйте QR-код и начните инвестировать в Single Stock ETF уже сегодня. ITS представляет новый продукт Single Stock ETF. Старт торгов уже в сентябре 2025 года. Что это такое? Single Stock ETF – это биржевой инвестиционный фонд, который повторяет цену одной конкретной акции, но позволяет купить ее частично. Как это работает? Фонд приобретает акции одной компании, например, Amazon, делит их стоимость на части, к примеру, один Single Stock ETF – 1/100 акции. Инвестор покупает Single Stock ETF как обычную ценную бумагу в приложении брокера. Цена всегда повторяет динамику базовой акции. Начните инвестировать всего с нескольких долларов. Владейте долями ведущих мировых компаний. Сформируйте диверсифицированный портфель менее чем за $100. Отличный первый шаг в мир инвестиций. Сканируйте QR-код и начните инвестировать в Single Stock ETF уже сегодня. ITS представляет новый продукт Single Stock ETF. Старт торгов уже в сентябре 2025 года. Что это такое? Single Stock ETF – это биржевой инвестиционный фонд, который повторяет цену одной конкретной акции, но позволяет купить ее частично. Как это работает? Фонд приобретает акции одной компании, например, Amazon, делит их стоимость на части, к примеру, один Single Stock ETF – 1/100 акции. Инвестор покупает Single Stock ETF как обычную ценную бумагу в приложении брокера. Цена всегда повторяет динамику базовой акции. Начните инвестировать всего с нескольких долларов. Владейте долями ведущих мировых компаний. Сформируйте диверсифицированный портфель менее чем за $100. Отличный первый шаг в мир инвестиций. Сканируйте QR-код и начните инвестировать в Single Stock ETF уже сегодня. ITS представляет новый продукт Single Stock ETF. Старт торгов уже в сентябре 2025 года. Что это такое? Single Stock ETF – это биржевой инвестиционный фонд, который повторяет цену одной конкретной акции, но позволяет купить ее частично. Как это работает? Фонд приобретает акции одной компании, например, Amazon, делит их стоимость на части, к примеру, один Single Stock ETF – 1/100 акции. Инвестор покупает Single Stock ETF как обычную ценную бумагу в приложении брокера. Цена всегда повторяет динамику базовой акции. Начните инвестировать всего с нескольких долларов. Владейте долями ведущих мировых компаний. Сформируйте диверсифицированный портфель менее чем за $100. Отличный первый шаг в мир инвестиций. Сканируйте QR-код и начните инвестировать в Single Stock ETF уже сегодня. ITS представляет новый продукт Single Stock ETF. Старт торгов уже в сентябре 2025 года. Что это такое? Single Stock ETF – это биржевой инвестиционный фонд, который повторяет цену одной конкретной акции, но позволяет купить ее частично. Как это работает? Фонд приобретает акции одной компании, например, Amazon, делит их стоимость на части, к примеру, один Single Stock ETF – 1/100 акции. Инвестор покупает Single Stock ETF как обычную ценную бумагу в приложении брокера. Цена всегда повторяет динамику базовой акции. Начните инвестировать всего с нескольких долларов. Владейте долями ведущих мировых компаний. Сформируйте диверсифицированный портфель менее чем за $100. Отличный первый шаг в мир инвестиций. Сканируйте QR-код и начните инвестировать в
companies. They're structured in a way that investor can buy 1/100th or 1/10,000th of each stock. So an investor with a capital of 100 USD can diversify his or her portfolio. This is the first umbrella ETF fund together with AFSA and AIX. So we are doing that on the platform of IFC. There will be more instruments. There will be dividend papers and other ETFs. And AFC offers a tax-free regime. And these instruments were listed on AIX, denominated in USD, and the price for ETFs is this. So same price with a correction on the ratio. Let me invite Chingis Kanapenov, head of ITS, and Nurlan Ashimov, company helping us to do all that, so that they strike a gong. Growing together with our market. Congratulations on a new market, on new tools. Looking forward to seeing you on our platform. Thank you, colleagues. So, the ceremony is over. Now investors have more choice, more instruments, more opportunities. After the fundamental session, where we discussed the general state of economy, global economic context and landscape, AI opportunities. This was a theoretical part, but now we are going to have a more practical session. We will try to calculate to see how much money is there in our pockets and in the pockets of other people. I'm sure that there are investors who are winners. We'll talk about that. We'll discuss the market, the stock market, and what are the perspectives for the nearest future from analytical perspective. So experts will share their experience. Those who are practitioners on the market. I am Pavel Pakhomov. I'm the director of the ITS Analytical Center. And my colleagues are here, Vadim Merkulov, director of the Analytical Department of Freedom Finance Global, Amir Akhtanov, senior analyst of Halik Finance, Sultan Jumagali, director of Department of Analysis and Research, BCC Invest, and Koanish Kostaubayev, director of the Analytical Department of Centras Securities. So they will share their thoughts about the markets later on.
They will show a lot of interesting things and a few words from me and the vision of our analytical structure on what is happening in the market, in the principle, because the session is the opportunity and prospects of the stock market, and In terms of markets in general, I can find it difficult to explain how many years we have the global upwarding trend, which is currently achieved, in my subjective opinion, dear colleagues. You may have another opinion. It reached the maximum, at least last week. The historical records were rewriting the American indices, including ITSS indices and ITSW, which are estimated on our platform. And global indices are reaching absolute highs, at least locally. So the situation from external point of view looks very nice. But let me be frank, because I've been working in the market for quite some time, it's a bit daunting. I remember the year 2008, and we tried to analyze the markets. I remember in June 2008, absolutely all tools were on their highs, except timber work, except for timber work and slabs. Everything was on high. But what happened in later 2008, we all remember. It was a signal. And the key growth drivers, look here, the S&P 500 index dynamics, it's observe 10% of growth, and let's see what happens next. And it's a bit daunting dynamics. Well, it looks nice, you can earn a lot. What is the key growth driver? Well, from economic perspective, we can see a lot of politics, geopolitical risks, and my colleagues will be talking about uncertainty, volatility. I mean, what is there in the market, but still, in terms of key growth drivers, the key story over the past few years would include a hype on the backdrop of AI, Mach 3. Buy not Apple and Amazon, but you'd better buy small, medium companies linked with AI. But still, the significance of this Mach 7 share is great. You can see the share of Mach 7 in S&P 500 index. In 2015, it was 12.4% of weight. Now it's 36%. 36%. Which means that 68% of all the growth of S&P 500 is gained by these 7 shares. It's a colossal thing, and yet more impressive capitalization. Look, capitalization of S&P 500, $53 trillion, of which 19 trillion exponential, and the influence of this Mach 7 share is colossal. And it is a foundation of a trend that we observed over the past few months and years, I would rather say. But the situation is obviously changing. You may disagree or disagree with me, but overall, investors in terms of perspectives in larger companies, they are not obvious. Their share is high and remains big. But if you look the early this year sector return, the technology is not number one. It used to be the foundation for growth before. Now it takes an intermediate seat in the middle with an average yield. And accordingly, significance is very high. So, where the investor should go to? In terms of key areas, taking the hype with AI, there are three key areas: cloud technology, AI, and the quantum technology. These are three key areas. And accordingly, we need to assess them differently. Cloud technology, it's a foundation for the digital economy. It is a well-established thing. So much money is injected based on the 2025 data, $750 billion. And most interestingly is that, coming back to the Mag 7, the share of three projects, these are Amazon Web System, AVS, Azure, belonging to Microsoft, owned by Microsoft, and Google Cloud. So the share of these three projects, of these three companies, account for 65% of all this 750 billion. Just imagine for yourself. I mean, what big money we're talking about. And the projects are exciting, and the key objective of these companies is to put everyone into AI. I remember a joke. It's not related to AI, but at least can be rephrased. When two AI meet and one talks to another. You know, in the world of animals, monkey is closest to human. So this trend, when everything is switched to AI, on the one hand, it's obvious in the investment market, very much obvious. For instance, I follow international resources, international brokers, and an avalanche of messages that we broker, it could be anonymous, no-name broker, we have created a system of decision-making based on AI, which would guarantee, as always, it will guarantee you 20, 30, and as high as your vision can imagine percent per day. But it's important to process and engage people. And international big brokers and Kazakhstani brokers, they all tell the same story, but we need to understand that we should verify the data, how accurate data you use, how can you trust this? Because in the modern world of fakes, there are more fakes than truth. It's difficult to make an accurate decision. So coming back to these three projects, yes, cloud technology, and their job is to build a huge data center and then link it to AI, and then engage businesses and deploy. So this is a well-established thing where you can invest, and the average yield is around 20% roughly. Second direction is less advanced but growing rapidly. It's AI for investment market. There are three large players. Well, names of these players are well known: BlackRock, Bloomberg, and Citadel. Where they are going and where it is worth of investing, yeah, on the one hand, it's about data collection system for analytics purposes. Number two, it's about data collection system for developing mobile applications. Number two, and number three, is about investment to infrastructure of artificial intelligence. And accordingly, in this situation, you may invest into the companies which develop artificial intelligence, but also you can invest into another thing, investment into the energy. It's a key trend these days. Energy will provide support for these data centers. I can give you a name of one company. I'm not giving names of companies. There are many more, and they are traded in our ITS platform. I can give you the name of just one company, Okla. Unlikely you have heard of this company. The profitability is 1,000% a year ago. They are traded in ITS, so you are more than welcome to make a deal. A year ago, the stock cost $7. Now, they cost 71. Yesterday, 71. What company is doing? They create module micro nuclear power plants. So if nuclear power plant is built 10 years, then micro nuclear power plant will take just 1 week to build and run. And this would engage Apple, Google, and other giant players. This is where we can see growth. This is the key direction, and I'll give floor to my colleagues to make their own interventions. And the third direction is quantum. It's more venture investment, quantum technology. So only specialists can say what's happening. Photon networks, no laptops without cryogen, because quantum works on cryogen area, cryogenetics at extremely low temperatures. And Cisco is creating laptops. This is a potentially interesting thing which can give you 1,000%, but with high risks. So this is what is moving the market. It's like a foundation. Then my colleagues will take the floor to explain the regional industry-specific perspectives. So I will not take too much of your time. And now the floor will go to my neighbor, Vadim Merkulov, who is going to share what's happening in the global uncertainty, which we can talk for hours, and accordingly, the risks related to the current situation. Over to you, please. Yeah, thank you so much. I will go back to your statements about assets that we're selecting, how they are built. Let's refresh our memory. Experts, you should definitely remember how the profitability and volatility and risks are growing. We have a curve. In this case, we try to make it a straight line, but it's curve. Cash, T-bills, these are things which have low risk or zero risk. You have cash, no risk, no profitability, and cash is you have it eaten by inflation, and that's it. Then T-bills, short-term sovereign securities, but in theory from US, which in theory has zero risk of bankruptcy, and then they can give you minimum yield, what we can see in the market these days. And then it goes up, up, and up, up. IG obligation, gold, high dividend stocks, emerging market bonds, growth stocks, emerging market stocks, and they can change depending on what we're looking for. We understand in Apple comparing with gold how adequate it is. These are two different assets, different approach to analyze these assets, how you can assess Tencent and Apple. Tencent in the developing market, but with some monopolistic indicators and huge diversified businesses, monopoly and support from the state. I mean, the business is rather stable, and even gold can look weaker versus these stocks with regular cash flow, with dividends, with clear products and position in the market. And then, depending on what is the context, And this story can change, but slightly, and you can be guided by this. You can remember these stocks like Okla, modular nuclear power plants, but the project they can demonstrate in the nearest future is 2029. Very regulated story. Oh, and potential growth capacity is huge. And on this chart, this company would be close to cryptocurrency with high yield, high risk. So risk and yield go hand in hand. It cannot be opposite or a different way. And if we see growing risks, investors should be paid for this, right? And we can see the macroeconomic instability. We see experience inflation, money gets cheaper. Investors should be paid for this risk, and the profitability will grow. It starts from the key interest rate up to the chain, up to discount rate, and so on. When the structure is changing, the behavior of stocks will change as well, and the strategy would change. For instance, if in average your volatility before COVID-19 was in 2017, well, it went up against Trump and trade war. What he's doing now, it's not surprising us, but average volatility grew a bit, and we observed that which assets grow up. You see growth of stocks market was blooming. You had tax reform, and then 2018 you have trade war. Volatility is growing up with destruction of volatility market, and it was listed like buying VIX via VXY, ETS, and then the opinion that in 2017 the factor of low volatility, I mean companies with low volatility performing better because investors were looking for assets that are more or less stable. This year situation changed a little. When we had trade war onset, we observed a growth factor of low volatility growing up, but at the same time, after Trump started prolonging this non-tariff policy, we observed growth jump back in the market. We observed the quickest drop in occurrence in April. So we look in the market in a very positive way. So we have improved highs against this backdrop as well. You can trade your volatility in different ways. Selling your options. You have peaks over 20, 30, 35. Last year we observed high jump against Japanese yen. When there was a volatility onset, we see increase of VIX up to 60 in the chart. But as a matter of fact, if you look what was the prim of the trade, you would see 30, 35. I mean, people were not trading volatility in the moment. P-Dusk grew because we put volatility, I mean, expected volatility happens because you have expectation about market instability and problems that the Japanese stock would close the average positions in the American markets and it will give a boost. But in the moment of high volatility, it's obvious that in the chart you don't see trades of volatility in big amounts, and you can sell your option like for S&P 500 SPY, and it looks like a good strategy. But if you need something simple to understand the challenging nature of options, it's another story. And you can buy VIX futures, VXX, UVXY. It's a leveraged project with inbuilt lever or arm. This is for short term, not long term. You cannot keep it for months, for year. It's just 24 hours or few days only. And this is where you would rather have. Can you hear me? Can you hear me? an approach for this product which is good when you trade short, like 1 week, 1 day, to hedge your position.
September is a great month. We know that traditionally September is quite weak, usually, especially against the background we just discussed. We saw the graph by years, and seeing that figures need correction, although so maybe we don't see the risks now, but in short term, yes, you can trade with ETFs. You can buy volatility, and you can also get the hedging, investment grade bonds are lower than the gold. I wouldn't put gold there because gold as assets has a certain protection, but not always. In current unstable conditions, in current inflation landscape, as well as inflated budget after COVID, no fiscal discipline in the countries. Both developed and developing countries, we see it everywhere. We see that gold is a good asset that can give you protection against inflation and instability, as well as to hedge your infrastructure risks. When some countries are prohibited of having reserves in the other countries due to objective reasons. So it's one of the key elements for the developing countries that don't want to bear risks. For instance, China and its implications with Taiwan. So I think that all of that make gold an attractive asset. It's not only due to inflation or protection from uncertainty. Let's go further. There is a macroeconomic scenario of uncertainty. It's a good example of tariffs impacting the economy. You can see the growth of real GDP minus 0.5 in the first quarter, 2.4 in the first quarter, in the second quarter 3.0. It's all great. Where minus 0.45? It's just because companies knew that tariffs will grow, so they bought more to be imported to get adapted. So it had an impact on the GDP, with the GDP dropping down. So in inflation, of course, there is an impact of tariffs for inflation. If you increase prices, yes, your supplier will get some expenses on their side in order not to lose the market, but consumers also have more expenses. It's not like all the countries pay for the tariffs. That's not correct. It's all half by half. And you can see that it's not shown in the inflation because of good management. Because companies in advance increase their stocks in the warehouses in order to get better adapted to new tariffs. And Trump was doing that, and we are seeing gradual impact on inflation. Well, inflation can be stable. We can compare the data Q2 and Q3. You can see it here. So maybe it will be a little bit lower, but I think that the inflation will be stable or will grow a little. 3.1, 3.2, 2.9. So it's like a basic scenario. BAU scenario. 2.5, 2.6 is the expected inflation in the years to come. So in terms of unemployment, the situation is very stable. I'm not sure, well, I'm sure that it will not grow a lot. There will be some increase, 4.2, 4.4 by next year, because the economy is reviving, and with the AI, Microsoft started firing people, because of high efficiency, thanks to 80% of people had to leave. And these are first steps. Of course, not all the people will be fired. We shouldn't worry. The unemployment will not grow a lot, and the migration policy, don't forget about that. In the current policy context of the US, there will be a shortage of people, especially if these are not white collars, but rather working as cleaners and at restaurants. There will be a shortage of such people. So the unemployment will not grow a lot. So these are key factors of uncertainty: tariffs, unsustainable growth of public debt. So in terms of the bubble, we have to understand the AI bubble. Recently, there was an IT study saying that 98% of current startups will get bankrupted because they don't have a good product. They don't get income. Yes, new technology is coming. People start trying it. Not everyone is successful. 5% or even less are quite successful. Maybe even less. Facebook, Google, Amazon, who started with books. These companies have not been non-existent. They existed. So there are so many things happening. Yahoo, that was sold in a moment in time for 44 billion to Microsoft, was an offer then. In 2 years, they sold for 3. Such success stories. Of course, there are some risks, but not very much. So what are the drivers for the economy? How the economy will react? What will be the inflation? What about this fiscal principle, this Trump's piece of legislation, how it will look like? So how it all will affect the future profits of companies. Almost done. What is the architecture of a portfolio? It's important to reduce the volatility of a portfolio. They could be deposits or short-term bills, I mentioned, or short-term bonds or strong corporations such as Apple with high investment rating. Of course, the profits are small then, the spread is short, and colleagues will also comment. Gold is interesting in the current conditions. So balance between stocks, ETFs, and securities, but the risk is higher. So what will be the breakdown? In our basic portfolio, it's 73% of stocks. We like the economy of the US. We like the growth and profits over the last quarter. The forecasts are getting better. So the tariffs are, of course, impacting the profitability, but still it's profitable thanks to AI optimization. So we focus on stocks, but at the same time, they should be stock with good balance. They must be well balanced on the market. We don't have Tesla. Such companies as Google, there was a good piece of news about regulation. Amazon, Meta, they feel good. So communication sectors was ahead of IT, Meta, Google, that are not under tariffs, high profitability and exposure to AI. So Let's think about our strategy until 2025 on the US market. Colleagues also need time. You cannot stop an analyst. Briefly, basic scenario, 50%. We believe that the index will be about 6,400 points. What does it mean? There will be a small correction in September, then in October a little. So we're seeing some backlash, but there will be a recovery. Index will not go beyond 6,400 or 300. So, of course, tariffs will affect inflation, uncertainty, loose fiscal policy, with consequences for the bonds and debt market that may cause up pessimistic moods among the investors. So in terms of sectors, you can see our tactical approach and strategic approach by the end of 2025. IT, sector neutral, higher multiplier. Difficult to find a good story, but at the same time, a strategic approach is quite positive, strategic forecast. So I think that is all from me. Our favorites, big tax, healthcare, but not everything because it's heavily regulated, but in terms of profitability. So in terms of multiplier, it looks cheap. United Health, after the backlash, and Buffett got a position up. So I think that these things could be found on the market, and in a volatile time, you can create an exposure picture to identify and to set up your strategic approach. And your portfolio, of course, will not get 1,000%, because there are risks, there are profits that go hand in hand. So it's never happens that you get 100% profit, but you won't get you won't lose 90% with this approach either. So thank you so much. I think that it was very interesting and very useful to understand your approach. So I wanted to know what S&P will be by the end of the year, but no one knows. Let me give the floor to Amir Akhtanov, a senior analyst of Halyk Finance, who will continue choosing the sectors, the companies in this volatile time. Because now we are at some breaking point, but let's remember that. Today I'll talk about the criteria we use to choose sectors in this dynamic world. I don't want to share the theoretical knowledge. Let me share the experience of Halyk Group in this volatile time and how we did it for our benefits. So let's not talk about the market situation. My colleagues have talked about that, but global indices, they broke new heights, especially European stocks. Many benchmarks grew more than 30% over the year. Special demand of investors was channeled to the European banks. Euro stocks, banks index grew like 50% over the year, and many financial organizations have shown double-digit growth. First of all, because of active mitigation of fiscal policy in Europe, there was a rotation of capital from the other regions to Europe. But USD exchange rate went down a little, and European stocks during trade war between US and China became safer. In terms of the US, the American indices have shown growth, and their rate of growth was 12%. At the same time, I'd like to say that consumer behaviors, if we take the April data, there was a massive sale of US stocks in April. A special threat was posed to drivers of the market. The IT sector, with AI representatives, has slowed down as well. Communication services, Meta platforms with Google. Also, there was a very sharp downward trend. So in this volatile time on the market, the safe haven companies, utilities, healthcare, but they also went down, but their slowdown rate wasn't that big in comparison with the IT and other mentioned sectors. There was some stability in gold assets. For instance, GX fund with popular American and Canadian gold corporations. The growth rate was 0. And there was some growth during the massive sales of stocks, but they were quite stable. We recommended at Generous Gold, a Canadian company, during this massive sale. It grew 6%. And overall growth was 60% in this company. Now I would like to tell you more. Let me talk about the market crash and so this massive sales, of course, they give you an opportunity to get high-quality assets. Let's talk about the pandemic 2020. Also, the market dropped a lot from February to March over 1 month. From 17th of February to 20th of March, the market was going down. And even FRS meeting over the weekend didn't change the situation. The markets dropped, and this drawdown was inevitable because the investors were thinking about the threats. So positive growth was observed only in companies that can create a vaccine against coronavirus. Moderna stocks, and as well as sites and other companies went up. So in 2021, only 6 companies out of 500 in S&P 500 had positive growth rate. So in the middle of March, we started buying the discounted stocks. And we bought stocks from companies of streaming services like Netflix. as well as video games, Lizard, Take-Two Interactive, Electronic Arts, and retail companies with the expected growth in demand for their products. We bought stocks from big techs, finance companies, those who can get even benefits from the pandemic. And although there was a drop down on the market at the end of year, actually the year was quite successful because all these companies grew in their value.
The next market episode, year 2022, rather memorable turning point year for many countries from the perspective of stock market, geopolitics, and so on and so forth. The decline of global indices took place during the year, and beneficiaries of 2022 were energy companies for sure, and in the expectation of war conflict between Russia and Ukraine resulted in a high increase in energy prices for energy carriers. This increased three-digit values, and quotation of Brent oil was $120 per barrel. And in this condition, the key beneficiaries were energy companies, few of which demonstrated triple growth rate. And the same story as in COVID. During the heavy sales, we purchased high-quality assets with discounted rates, and as soon as the market recovered, we earned a lot. Certain stability in this period of time demonstrated by gold after the military actions started. The gold for a short time exceeded $2,000 per ounce, and then lost its advantage by being traded with zero dynamics. During the market volatility, there was a temptation to purchase protection sectors like consumer goods, telecom operators, utilities. However, we didn't go for the whole sector. We had a pinpointed selection of assets. Let me give you an example of quotations by telecom companies, some of which demonstrated good growth dynamics. AT Mobile, AT&T recovered as well. And during volatility, we focused more on protection character of these assets. We tried to look at the current dynamics of the stocks. We analyzed key market multipliers, comparing with average, and we had a strategy to purchase cheaper stocks, which went down because of emotions. And let me give you an example. British American Tobacco, BTI, because of regulatory risks, because of multi-billion write-offs, quotations of the company went to downward trend. We took risk and we gained on this. We benefited from this. During this time as well, it was end of 2023, I mean, the beginning of this long trend on gold. We evidenced that this trend on gold is long-term. And in the first place, I remember a recent story that the gold exceeded $2,000 per ounce, but the quotations of gold mines did not follow the trend of the baseline asset, because in the recent past, overcoming the level of 2000 did not guarantee protection and the production cost of the baseline product was higher than the value of the company, and investor did not want to invest into the gold mines. But seeing $2,000 per ounce of gold, and it's not limited, like 2,300, 2,400, all these companies faced significant growth by the end of 2023, early 2024. We found the popular Canadian producer, Agnico and Gold Mines, which represented a high-quality asset in safe jurisdictions. And plus, it had a very good cost of production of gold refining. So we turned this trend into the gold. In conclusion of my presentation, let me focus your attention that well-known factor to go to the assets of safe haven. It's not always a good decision, especially based on the episodes of sharp drawdown in the market sectors, which will not suffer because of slowdown and trade wars. They cannot always overcome the market panic. You need to select targeted stories, targeted assets, and consider this from historic perspective. And after that, you can choose a particular stock. Taking the current situation, despite the gold quote sold at $3,400 per ounce, we still are optimistic about the metals. And let me say that according to the study by World Gold Council, the majority of respondents expect that the share of United States dollar in reserves would decline, but the gold reserves in central banks would increase, and this would be a benchmark for quotation of the precious metals. Also, observing the purchases of gold by central banks globally, the shocks of 2022, which resulted in immediate withdrawal of $300 billion from Russia, it gives a signal to developing central banks to focus on safe assets which cannot be withdrawn. China is succeeding in this situation. Let me stress that over the past 8 years, in 7 cases, China was actively getting rid of US treasuries, and all this money was turned into the gold. Moreover, that these days we have trade wars, and in my opinion, China and other developing markets would retain the high purchases of gold. And despite high purchases, because of high base of previous years, this year analysts expect a certain decline. If we take into account midterm forecast, the volume of purchases would be higher of previous years, especially in 2024. Central banks purchased 1,086 tons of metal versus 473 in the years 2010-2011, which I think for any investor, very conservative, be it aggressive, certain allocation on the gold, in my opinion, based on the expected adjustment, market adjustment, will be a very wise decision. With that, I conclude my presentation. Thank you very much for your attention. My greetings to all the participants. Thank you so much, Amir. I have a question. Vadim gave us a picture in the end of the year. What's your expectation in the nearest, before the new year, before end of this year, in the market? Do you have any vision on this? Right. If we take the consensus forecast of Wall Street, 6,500 S&P, it's on this level. Some increased targets, 6,700, 6,900. There would be some sidelines, and September is the weakest months. And after an impressive dynamics, I think that we can face volatility, and I think more or less we can be on the same levels. Maybe Santa rally can happen in the end of the year, but it depends. And despite there could be give or take error, some stocks traded in the US market can demonstrate high yield. From a global perspective, this year, well, at least myself, less focused on the US, we're focusing more on companies like in Singapore, China, which are traded in the US, even from Canada, and I can tell their dynamics outpacing the analogs in US. Thank you so much. Let's continue. And now let's talk about the regional markets, I mean the perspective on regional markets. And the floor will go to Sultan Jumagali, Director of the Analytic and Research Department, Director, joint stock company of BCC Invest. Please. Thank you so much. My name is Sultan, and today I'd like to talk to you about investment types such as, speaking simple English, we look at the world map and we choose where to invest. A little in America, a little in Europe, something in exotic countries such as Latin America. And this approach is well received by beginning investors, large funds. And I like this approach as well, because taking this approach to investment, when you choose the region, then we gain certain confidence in uncertainty of what's happening now. Let's start. So this is the heat map of annual return in the past 10 years. And if we take the findings, the US and other developed markets to a larger extent, by the end of the year demonstrated positive return, whereas markets in China, in Hong Kong, had years with more volatility, with negative numbers, negative values. And there are exotic markets such as Latin America, which is especially last year and this year deserved some attention from investors' point of view. So you should not invest into portfolio which is divided equally and invest in every region, like 10% US, 10 Europe, and 10% each in each region. This approach is not working. This is where you have to be more selective. Annual return in local currencies, it's for your reference, and these are annual returns in United States dollars for your reference on this heat map. Next, we'll look at the correlation of monthly return of global indices, high links among developed markets, i.e., when we invest into developed markets only, such as US or Europe, then we see the decrease, the diversification factor. And in order to kind of dissolve such a portfolio, you have to add those regions with lower links, lower connection between Latin America and Kazakhstan, which is quite logic. And this is for your information. Correlation is denominated in US dollars. Next is where we look at three parameters, risk, return, and maximum drawdown. The higher the bubble, the higher is the drawdown. And we can make a decision that investing in NASDAQ demonstrates good return over the last 10 years. However, the investor has to pay high volatility for high growth. As for developing markets or emerging markets, quite unexpectedly, Kazakhstan market shows itself as a good return with very balanced risk profile. Well, in the first place, this is because certain specificity of Kazakhstan market. If we talk about balanced approaches, balanced indices, it is S&P 500 and GCI World. These are indices of all the stocks, and this bubble chart shows comparison of markets in US dollars. Next, it's about rolling sharp in 12 months, and we can see that developed markets in the past years, 24, 25, leveled up because there is return stabilization, normalization of interest rates, among other things. To compare, we demonstrate the world indices comparisons, and there is some reason for being proud that our Kazakh index is outpacing those in our sampling. Well, of course, this is tenge, and the others are traded like Nasdaq and S&P are in dollars. In terms of developing countries, here, local index is leading. As for other emerging markets, in 2025, as my colleagues mentioned, the reality about new tariffs is softer than expected. We observe weakening of dollar against the fiscal deficit and more soft approach of FRS and decline in inflation, which make other markets like Korea or Taiwan to show two-digit yield, 26% in Taiwan, because of high inflow into the semiconductor sector. You can mention the African market, which is very specific. It stood out. And the driver here, motor house, is the financial sector. Like powerhouse is like banks of Nigeria, plus 30%. Middle East remains stable with very good prices for oil. And developing Europe received a revaluation on improving fundamentals. As for the emerging markets, certain incentives they received because the share of central banks, which softened their policies, increased from 64% to 86%. This can include Brazil, Chile, Hungary, Romania, India. Unfortunately, this trend cannot be confirmed here in Kazakhstan. Our rates would remain high. I will explain a bit later. Now, we view different parameters, risk, yield, rolling sharp, and so on. What findings we can draw here? The baseline for investor into our region that the bigger share should remain in S&P or in global stocks, which show relative high return. In order to add up to risk, maybe Nasdaq can be added. As for the emerging markets, our recommendation would be to invest into bonds of developing markets with the duration, short-term duration, because the current rates on return for such bonds will allow for good yield with lower risk. Well, in general, we propose to have such a distribution. And let me brief you on Kazakhstan a little. We observed the increase in price in 2025. In August, like yesterday, the new data came out. 12.2% is annual inflation rate. And we see growing price for food, grocery products. Also high inflation rate on paid services. Maybe you observe this, especially who live in Kazakhstan. In your utilities bills, increasing price for cold water, for electricity, and so on and so forth, because the tariff in exchange for investment is running, and we as residents pay that old utilities networks would be modernized, and this is reflecting on inflation. We can forecast inflation this year very well. You can see line 6, forecast deviation. So the maximum deviation was plus 0.6% in February, but we noted high jump in grocery products prices. Now let's move to what is scarier to forecast. It's USD to Kazakhstan tenge rate. We have 3 scenarios: optimistic, baseline, and pessimistic.
Let's speak about August. August has finished. In August, so the average monthly exchange rate was 539. In our projection, it was 538. So projection was quite good. So basic scenario is that tenge weakens. Our model is showing that the average monthly exchange rate, so average annual will be 528. So now the average rate from January to August is 520. So it's not very good looking, but we need to know when it can happen. So in general, we're expecting the weakening. The pessimistic scenario is 564, but the basic projection is basic. It's our current expectations. So this was about Kazakh market. There was a slide. Maybe when we speak about risk to profit, if it's a retail investor, so without considering liquidity or access to the markets. So let's say we can buy and sell on the market, all is good. What are the top 3 regions for 3 years? What should be our main focus for investors? It's a good question. So on the map, we were looking for the lowest P. Latin America, undervalued region. Uzbekistan, in terms of fixed income, it's good. The economy is thriving. It's close to us. We understand that it's not Brazil or Chile. It's very close, our neighbor. More and more businesses get opened there. New companies come to the market. Stock market is growing. So I can recommend looking into the fixed income instruments in Uzbekistan. So stocks, or fixed income. But what if the stock market, well, stock market doesn't guarantee you anything. So now the stock market incomes are okay, but what if something gets wrong? So let's talk about the instruments of fixed income on the market. But once again, we talk a lot about that, public debt of the US. When the America crashes for 50 years, they expect US to break down, but tenge is weakening to USD and to euro as well. Let me give the floor to Kuanish, and he will talk about that. Thank you. Thank you so much. The topic of debt, especially US debt, is the topic discussed a lot. Everyone talks about it. So, in response to COVID, this man-made crisis, developed countries and developing countries start their fiscal machine rolling and going. Public debt is everywhere. No one mentioned that, while the rates were low. But because of COVID, there was a disruption of supply chain, deflation of assets, fueling the real inflation. And in response to inflation, monetary authorities, fiscal authorities, make their conditions more stringent. So the debt burden got higher. In absolute terms and in relative terms, the public debt of the US is 37 trillion USD. In relative terms, once again, GDP to debt is 120%. Historical record. Only in COVID times it was a V shape. Denominator was lowest, and then there was a spike, but 120 GDP to debt ratio is too high. If we don't look into the amount of debt and about just servicing it, so servicing to GDP ratio, the picture is not that bad. US has survived a similar thing when the servicing was more than 3 or 3.5%. So this was a paradigm for a long time, and they survived. So we need to make a note here. 30% of all the debt of US is short-term debt. Maturity up to 12 months. If FRS rate goes down, and it's a consensus on the market, then the servicing fees will go down. So when will US break down? Most likely it will not. This is the spread of treasury bills, long and short. Some people say that it's a prerequisite for crisis and recession, but it didn't work that way. Last time, there was an inversion when the profit at the near end grew and became higher than the profit at the far end. There are two assumptions why a crisis didn't happen. First one is that FRS piloted, navigated so well that it didn't just allow the economy to go into the recession. And another explanation is and I like it better, that there is no 100% indicator, there is no holy grail. The market is dynamic, it always changes. So what can we say here? Most likely, as FRS rates go down, EST will probably grow positively. Now it's about 10 to 15 basis points. This is ITS ideas, so I can share my idea. Well, derivatives are not the things I would buy because profitability went down. Maybe the curve, well, if the curve is projected to be very sharp, so I wouldn't really bet on duration. Deficit of budget, premium for urgency. There are risks. The market projects like the future. If people expect that the budget deficit will grow, then the premium for duration will work. If people expect that budget deficit will grow, then the premium for duration will grow, and it will grow further. And now it's not the time when you buy duration. That's all about the US. Let me share some details about Kazakhstan. We're not different from the US too much. We don't have fiscal discipline because of stringent monetary conditions. After the last increase in March, the profits from securities went up a lot. Here you can see the NBK rate and the yield curve in March and April, and the yield curve in July and August issuances. So the yield, the profits grew, and I think at the far ends they are quite attractive. I would give a recommendation to buy long-term Kazakh bonds because they're very attractive. It's not because I'm a patriot. That's all. Thank you so much. So maybe I misunderstand you. What about the speculations? I'm talking about the US market now. What can we do? Well, I don't say don't buy that. I mentioned duration. I wouldn't buy long bonds. And like putting a bet on the sharpness of a curve, that was my... So is it like arbitrage? No. Buying at near end and selling something and then finance the far end. We have a couple of minutes. If there are any questions to participants of this session, we have 5 minutes to ask them. No questions? Everything is clear? All is great? We made up our portfolio. We are happy about that. So the situation is quite dangerous now. At least, well, it's not maybe dangerous, but now I think we need to pay more attention to our portfolios. Maybe it's a breaking point. Maybe it's a local breaking point, but still there are projections from colleagues saying that we are on high positions. We need some corrections. And the statistical data says that over the last 5 years, the average S&P index decrease was 2.8, as far as I remember. Over the last 5 years, the September was like minus. We started negative, but it's not time for panic, like I sell everything and I leave that. That's not the case. But we need to think about that. By the way, my last question to Vadim. He said that we need to buy put options or a hedge with some tools, but it's for professionals. Derivatives are for professionals. It's like through a consultant. But what about the stock market, Vadim? How to hedge your portfolio? What do we need to do? During my presentation, I mentioned that. So the structure of the portfolio must be diversified. It reduces the risks. So the risk to profit ratio is better in this case. So it's one. Now two. Of course, there are put options and they are complex tools, but it's desirable for investors to have it because it's flexible. It's very convenient when you have S&P, you're an investor, and you just buy put options, and then I just fixed a loss for some time. It's a flexible instrument. So this is the cost of put options. It's like we call it a fear index. Now it's 18. Now it's 18, so you could get profit from the yesterday loss. So it's inverse into ETF. So it has been created to control the profits from indices within a day, and you must be careful with them. We recommend them for short-term speculative story. So you get a profit from hedging. You give it to the provider of this hedging tool. You have to pay him for such a tool. So if it's a short-term story, then what you have on the table is minimal and it's convenient. If you have this tool for 1 year, you'll lose a lot. And you can see it on all the leverages of ETFs for 10 years. There are inverse ETFs on Nasdaq. So you can get inverse ETF for 1 or 2 weeks. So these are speculative stories. So this is a small element in a portfolio. 1 to 3%, not more than that. It's your hedge, it's your insurance. The insurance shouldn't be 10% from your portfolio, otherwise it becomes a position. So that's how we allocate all the risks. Many colleagues said that any drop-down can be your start for profits. When Trump on Twitter writes, "We buy," like US president tells you, "Buy," but you don't listen. Who is the main speculant? This question is solved this year. Of course, it's very difficult to do a projection on the market. My colleagues will agree with that. So, we can speak about that a long time. Thank you, colleagues, for your ideas. So, goodbye and see you.
Спасибо.
ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities. Made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS. ITS is an international hub of liquidity and opportunities, made in Kazakhstan, growing stronger with AIFC. The market has practically absolute liquidity, which enables any investment or speculative strategies to be implemented. ITS's infrastructure includes its own central depository and central counterparty. The availability of thousands of ITS investment instruments provides opportunities to diversify investments. An extended trading session allows investors to act upon financial news when other markets are closed. We operate in accordance with the AIFC rules, providing our clients with transparency and reliability. ITS has the largest turnover among the stock exchanges in Kazakhstan. ITS indexes grow along with global indexes. Be inspired, invest, and lead with ITS.
Коллеги, давайте продолжать. Я понимаю, что после обеда...
Dear colleagues, let's resume our work. I understand how difficult it is to gather after lunch, to get the concentration back. But okay, let's continue our work. We will have a very interesting session.
Рынка Индии, пока вот все собираются и наши спикеры тоже.
And while our participants are gathering, here we displayed the current trading, and the single stock ETFs are launched, and they're coded, so we have to divide into 100, and paper should be divided into 10,000, and you can see how the prices of a single stock ETF should also be divided by 100, so you can see how it is traded. We can congratulate each other with real life trading in the first day. So, Anastasia. Okay. Where is our Indian colleague? He's coming. So, dear colleagues, let me introduce. So, the moderator will be Timur Turlov. And our esteemed colleague from India,
To say. Let's start.
So, it's a big pleasure to have all of you here, and I think India is one of the most fastest growing markets with one of the highest population in the world, and this population is getting even bigger every next year. And that's definitely going to be one of the most significant and most important economics globally. That's still a country with a lot of room to grow, with a great potential of GDP growth, with a lot of potential for market development, capital development, wealth development in the country. And I think it's especially in this tendency to creation of direct links between different markets. It's extremely interesting to provide an opportunity to investors in Central Asia, in Kazakhstan, in this big region, actually to access this very interesting but very complicated market. Because India have a lot of different regulation, but as I know, here in ITS is going to launch exchange-traded product created in Astana International Financial Center, which will allow investors, even retail investors from the region, to access Indian markets on very easy and tax-efficient way, which is, I think, is a key pillar. And maybe we will create a global gateway to Indian markets to a lot of investors from this region, and quite unique gateway. Because the market itself full of opportunity, and if we are talking about $1 billion people of population in this country, this definitely should be $1 trillion opportunity for investors. And it's going to be interested to discover this market, and I am very glad to have such prominent speaker together with us. So we'll be very happy to learn more about investment opportunities in India. And have an open discussion to explore better between all of us. So, please.
Thank you, Timur. Can I just stand up for my presentation?
Yes, please. Thank you, Mr. Kahani.
All right. Welcome, everyone. As you know, post-lunch is the most dangerous slot in any conference. You guys just had a very good lunch and you're about to sleep. So if my presentation feels like Kazakh winter, not a Bollywood movie, I'm going to blame it on the slot. All right? But don't sleep we were children, why we did not invest in India, which was one of the best opportunities to invest in your data. So I'm going to just walk you through how we think about India. Just as a background, we manage about $2.7 billion in India, Indian asset, multi-asset class, multi-strategy. So we have a reasonable idea of what's going on in India in different sectors, equities, bonds, currencies, commodities, and everything. Just looking at the Indian numbers, well, when we're talking about India, you know the basic story. It's the land of snake charmers, it's the land of Bollywood movies, a lot of spices, and a lot of people. That you already know. So we are going to discuss more important things about why we think India is a great opportunity and why we think this opportunity is going to last for a very, very long period of time. The basic numbers I can show you, I don't have to make any comment. There are a lot of people. $1.5 billion, we are the most populous nation in the world, and I'll show you where we are in terms of per capita, so you can see how the growth is going to last for a very long period of time. India's GDP is like a multi-starrer Bollywood movie. You know, sometimes it's long, sometimes it's convoluted, sometimes it slows down, sometimes it has plot twists, sometimes there are Trump tariffs. But in the end, we deliver growth. If you look at any time frame, 1 year, 5 year, 10 year, you can see that we are one of the fastest growing, in fact, of the large economies, we are the fastest growing economy in the world. So even when we slow down, we are still growing at the Hindu rate of growth, which is 5%. When the government does something nice, we grow at 8%. So this growth rate is, we maintain it for a long period of time, and we will continue to maintain that for a long period of time. So in the end, India always has a happy ending. In terms of market capitalization, it's an economy and a size of market cap that you cannot ignore anymore. We are already ranked 5th by the market capitalization, and we have the highest number of listed companies in the world. We have about 300 companies which are over $1 billion in the market cap, maybe a little bit more. My data is probably a little old. We also have a lot of unicorns. I know you guys love your horses here, but we have unicorns. They're worth a little bit more than the horses here, about $1 billion each. 120 of them which are going to list in the market in the next 5 years. So it's a very, very deep market, relatively speaking. And the important thing here is that the market is not lopsided. There are multiple levers of growth in the market. A lot of Asian economies are export-centric, which means that if Trump tariffs come, Taiwan and Korea and all, they're going to have a problem because they don't have that much of domestic demand. Vietnam does not have that much of domestic demand. They are basically built to service US consumers. We are not like that because you've already seen we have 1.5 billion consumers in India. And the growth is spread across different sectors. So it's like a Bollywood multi-starrer movie. You know, if you know the reference of Indian movies, in the same movie we have Shah Rukh Khan and Amir Khan and Salman Khan and Hrithik Roshan, all the big stars together. And that is why India's growth is much more even compared to some of the other economies which are a lot more export dependent. This is the structure of the market. So if you look at some of the great artists in Kazakhstan, they are well admired, well liked, internationally acclaimed, but not very well owned by foreign investors. Indian market is like that. You'll be surprised to know, despite the fact that India has been one of the best performing market in the world, in last 5 years, the net dollar inflow in India from foreign investors is zero. It's literally nothing. 17% of the market is owned by foreigners as of now. Indians have been buying back their market from foreign investors in the last 5 years. So most of the equity is owned by the promoters. What we call promoters is the person who starts the company. They own 50% of the market. So the float is not as high as it might look because a lot of the float is with the family which started those businesses. This is not a very well-known fact. we are the largest market for options and futures in the world. We are so large that our market share in number of transactions that we do is bigger than all of the markets combined together. That's not something that I was aware of 3-4 years ago. And I'm sure it comes to you as a surprise. Like they say, universe is stranger that we can imagine. Indian stock market and options market is bigger than you ever thought it to be. So there are a lot of opportunities. We run a large, India's largest hedge fund in this options market. And we manage, it's not a very big fund, about $800 million, but we are 0.5% of the market trading volume. So the market is extremely large and extremely deep. So you can say that we just don't bet on cricket alone or football, we bet on volatility in the markets. These are very, very deep markets. Just a word on the performance of the Indian market. I mean, this is the reason why ITS has got me here and paying for my tickets, because we are one of the best performing markets in the world. If you look at our history in last 10, 12 years, we have been just below the S&P 500. So India has delivered very, very good return. You compare that to FTSE, you compare that to the emerging market index, we are very visibly far superior growth story in the world. The interesting part about India is that our returns are not concentrated on the top 7 stocks. Like if you look at the S&P 500 returns, and if you take out the top 7 stocks, the return profile actually comes down significantly. So the outside of the top 7 stocks, the market has not been doing all that well in India. If you think about a Real Madrid football match and the top 7 players like Mbappe and Vinicius are not playing, nobody's going to come and watch that game. India is not like that. India is like a Kazakh wedding party. Everybody gets a chance to dance. And that's what we have delivered over a period of time. The interesting part about India is that not only the India market has done very well, there is still a lot of opportunity to create alpha by fund managers, because there is a lot of information advantage. There's a lot of benefit of being on the market, to do research. There is information gaps that you can exploit. So there is an opportunity to add alpha. The green line that you see, that is our fund that we've been running for last 12 years. While market has delivered 11-12% return, we have delivered 18-19% return, because we have been able to generate very, very sustainable long-term alpha in our strategies. So this is a great market where you can still generate alpha, unlike most of the developed markets, where there is a very little opportunity to create alpha on a sustainable basis. I'm sure you've read the statistics that 70-80% of the active managers in the US, they actually underperform the market. Not only the market, I'm just showing you some of the stocks which have done very well. You will not be familiar with any of them. They are not in the index levels. But these companies have delivered, for 10 years, they have grown at, you can see the number, 30 to 44%. These are large companies, by the way. There are a lot of small companies in India which have grown between 60% to 130% annualized. You will not see them in the index level, but there are companies like that which have been able to deliver these kind of growth numbers, which you can compare to pretty much any market in the world, and you will find that there is a lot of growth opportunity where the risk reward is substantially better than most of the markets. Now, one of the criticisms that you hear about India is that India is an expensive market, which is true. If you look at the compounding of the market, one way to look at it is the PE ratio. India is today trading at about the median level. It's not cheap, 21, 22 times, it's not cheap. But India has rarely been cheap market. If you look at it, we are trading at a median valuation today. It hardly goes to 17, 18 times once in a while when there is a crisis. But on an average, these valuations have sustained, and for very good reasons. If you look at Another way of looking at markets is to look at the GDP versus the market cap. India is middle of the pack. I mean, we are trading at 130% of our market cap versus the GDP, which is better than United States, better than Japan. Of course, China is a very cheap market, but do you want to take the risk of going there? And if you look at trailing PE also in line, we are pretty much in line with other markets, but with a far superior growth profile that, that you're seeing in the other markets. Why? Because Indian companies have been built to deliver ROEs. That's the mantra that we follow, return on equity. Chinese companies have been built for scale. And they have scaled up very well, but if you look at the market return over the last 10 years, they have underperformed badly because they don't really care for rewarding the shareholders by generating a business which generates high quality of return on equity. Indian management has always been more focused on generating high ROEs for their businesses, and that reflects. We have the highest amount of ROE of all the emerging markets of any size. And India is financializing. I'm just showing you the number. We have something called systematic equity plan, where individual investors just put in some amount of money, maybe $50, $100, from their salaries. Every month it gets cut, and it goes into mutual funds. That number has gone to $36 billion a year. It used to be $1 billion a year. In last 10 years, it's gone to $36 billion. This money does not ask any question. This is whatever is the market valuation, every month, like clockwork, it goes into the markets. India is capital control economy, so you can't really take money out of India. It's like, you know, doing yoga, standing in one place. You can twist and turn, but you really can't move. And that is what Indian investors have been looking at, and they have been buying this market over the last 10 years, and this will continue because India is not going to open up its capital accounts. This will continue. All the growth that is happening in India, that money will circulate back into the markets. And that's why India is not going to be cheap unless there is a crisis. But even after all that financialization number that I showed you, if you look at it as percentage of bank deposit, the mutual fund assets are still a very, very low percentage of our financial assets relative to US. US is at 120%. Bank deposit, we love bank deposit like our mothers, and we love asset management, the mutual fund, like our mother-in-laws. We love them, but not as much. So there is still a lot of transition which is going to happen in India where people will keep taking money out of deposits and put in the mutual fund market. So the local liquidity engine is going to be very, very strong for a long time to come. But this is the real question, right? I mean, is India's growth sustainable? That is a real question that we have to ask ourselves, that yes, India has done well, but is it sustainable? Let me show you some charts here. We have the world's fastest working age population growth. In next 10 years, World Bank is projecting we are going to add 92 million working force in India. China's worker numbers are declining. Chinese workers are retiring. European workers are taking holidays. Our workers are probably sending WhatsApp messages, but you know, you get the idea. There is a lot of young population over there which is continuing to grow and add to the growth. By the time I finish my presentation, there will be 1,000 more babies born in India. If you stand in a train station, before the next train comes, you will probably watch 2 weddings, 5 babies, and 3 startups in India. So that's the kind of growth that you are seeing in India, and which is for a long period of time. And we still have a long way to go in urbanization. We are at 33%, China is at 64%, US is at 83%. And if you look at these numbers, all these guys, we still have to see a lot of growth because that worker population that is growing, they will demand a new home, bigger car, washing machines, Not dryers because we have too much heat anyways, so the clothes dry on themselves, but we still have to see a lot of growth in the Indian market. You know, in India, about 80% of the cities still don't have shopping malls. It is still a tourist attraction. When they build a shopping mall, people go to see that shopping mall. It becomes a tourist attraction in the city. So this will drive the growth for a very long period of time. We are still at a very, very low level in terms of per capita income. We are at 2,700, 800 around there. China is at 13,700, US is. This number again will continue to grow for a long period of time. If we grow at our 6 to 7% growth rate that we've done in the past, it'll take us 15, 20 years to get to China's level today. So there is still a lot of growth which is to come. When these numbers start increasing, people start consuming more, spending more, services goes up. You know the story. You've seen it in China. It happened last 30 years in China. You've seen it. Indian IT services, everybody knows, is a powerhouse. We're exporting, I don't know, maybe about $450 billion of IT services, all services put together. Direct IT services are maybe about $250 billion. You know, there are 1,700 GCC. These are global centers run by the global companies. All the research by JP Morgan is being done in India. Hedge fund managers are setting up offices to do research there. The quant research is being done in India. S&P has 20,000 people sitting in India. So a lot of these companies, global companies, 60% of S&P 500, that is about 300 companies, have set up their IT services center, their research centers in India. Why? Because obviously we have a very, very large pool of engineering talent and very cheap and English-speaking talent. So this is again something where we have been always good in the last 15, 20 years. You've already seen since Y2K scare. And today you know that a lot of the global companies are being run by Indians. They have a very high level of familiarity with India. So from Sundar Pichai to so many names, they are very happy to set up big centers in India and drive the growth of their companies by taking advantage of cheap labor in India. India is investing very, very heavily in the infrastructure side. We have such bad traffic jams in India that we invented meditation just to cope with it. So that you can sit in your car and meditate. So I'm just highlighting one part on the alternative energies. By 2030, we will have 500 gigawatt of new renewable energy resources in India. I didn't want to bore you with a lot of data, but you look at roads, you look at ports, you look at airports, you look at cities. We are investing $1.24 trillion to build our infrastructure in India. So it's a very, very large number, very well supported by the government. So the opportunity to create infra in India is like creating a Netflix soap opera. It will just go on and go on and on. There will not be any ending for many, many more years to come. This is something that India is quite proud of. I don't know if you've heard of it. We call it Unified Payment Interface. It's the UPI, the digital transaction. India is actually a market leader in this space. We've been exporting this technology to Asia, to Africa, to Latin America. And unlike the Indian physical infrastructure, digital infrastructure does not have any potholes. We have built this world class. And this is something which is another growth driver. This is driving the financialization of Indian market. This is driving inclusion of the financial market. 80% of the people now have bank accounts in India. Compare that to any other economy, maybe barring China. That's a very, very large number. I don't know if you saw this news or not. See, why did China's fortunes change? This is when Apple decided to go to China. Apple invested $400 billion. Apple trained a generation of workforce. Apple built cities. Apple built an ecosystem of suppliers in China. And that is why China had a very, very good manufacturing prowess over a period of time. Last year, Apple decided to do the same for India. Apple is going to move 20-25% of their productions. So next time you will buy an iPhone, you will probably see made in India, not made in China behind it. And this is something which is kind of giving you a signal that global manufacturing powers are also recognizing that if Apple can manufacture iPhones in India, you can manufacture a lot of profits in India. And we are seeing this trend. We are seeing this trend very, very clearly. Obviously, government has been supportive. I must say, like, we used to have red tape. Now we have digitized it. We have it in 4K, HD. Red tape still exists. But even then, because of what the government has done over last 12 years, this new government, our ranks have improved quite dramatically. Ease of doing business has gone from 142 to about 63. And there is a lot of focus on building made in India, like manufacturing. The government is supporting a lot. And that's why if you see, most of our economic indicators are quite stable. The CPI inflation is quite stable. We've seen reduction in repo rate. We have seen fiscal deficit targets. Currently, we are at 4.8. The target is 4.4. Now compare that to US, which is at 6.5% in GDP, fiscal deficit. So the numbers are actually improving, and numbers are becoming much more stable, unlike emerging market economies, which we also used to have 10 years ago. It used to be 6.5%, 7%. The interesting thing about India is that we are not dependent on foreign capital. The Indians are financing their own growth. The foreign capital is only about 19% of our debt, which means that we are financing our growth ourselves. We are not relying on hot money from foreigners. We are relying on hot money, hot savings from 1.4 billion people which are already there. Of course, no market is without problem. Our market also has problems. There are a lot of reforms which still need to happen. We've not invested enough, in my opinion, in education. Only 5% of our workforce is trained. So when people like Apple come, we need to make sure our workforce is properly trained. AI, we don't know how it is going to be disruptive. We have a large software industry. Some part of it will benefit, some part may not benefit. So that is still to be seen. There are geopolitical risks. If you think about it, 6 months ago, when people were talking about China +1 policies of most companies, that +1 was going to be India in most cases. It may still be the case, but things have not gone as per plan. Trump has put in a lot of tariffs on India, which was not, the expectation. But again, we will go through that. I'll just make a very, very quick comment on how we compare with Kazakhstan. I mean, you know these numbers. While you guys probably add one Astana in few years, we add a whole Kazakhstan in 1.5 years in terms of population growth. We are adding 12 million people. Your population here is 20 million. So you can see there is a lot of growth that is going to come because the population is still growing very, very fast. As I said, these are the top 3 sectors in India which have added last year about $180 billion. The entire market cap is $60 billion. So while you are raising fine horses here, we are raising fine unicorns there, and they are adding a lot of value every year. And India is a natural hedge. We are an energy deficit country. You have a lot of energy. So it actually makes a lot of sense when oil prices go down, your markets may be under trouble, but India will benefit a lot. So India is, in a way, inversely correlated to the oil prices. So there is a natural hedge for investing in India if you are a Kazakh investor. There are many opportunities for trade and collaboration, opportunities for direct investment. And India is not an easy market to invest, so you need a trusted partner like ITS to come in and help you navigate the markets. But there is a lot of opportunity. The rise of the global south, I think in the morning session people talking about de-dollarization, rise of global south. That is a trend which will only accelerate in my view going forward. And India is going to be a big part. And I think Kazakhstan, Russia, they are all very good in energy. China is good in manufacturing, we are good in services. So it makes a natural sense for us to grow closer and build businesses around the strengths that we possess without relying too much on the Western world. So that's my final message. We have strong fundamentals. I think there is a strategic alignment with Kazakhstan and Central Asia. So this is the time to look at India seriously and invest. Thank you.
Mr. Secretary, thank you for such interesting presentation. It's definitely a lot of opportunities. It's a lot of very fast-growing companies in a market which is definitely going to be much bigger than it is. But it also some very important questions for us. Maybe can you tell a bit more about general currency regime? So how the Indian rupee is doing? Is it stable enough? How easy to convert to Indian rupee in and out? So what's the FX risk for foreign investors could be associated with these opportunities?
Sure. So I think there are two questions in there. One is the focus on the Indian currency. If you look at the history of Indian currency, we have depreciated around 3.5% to 4% versus the US dollar. At a time when our fundamentals were much weaker and US fundamentals were much stronger. And today, if I tell you about a country which has 130% debt to GDP ratio, 6% fiscal deficit, that's US, not India. We are at 100% debt to GDP, we are at a 4.8%. So our expectation is that in the future, the depreciation will probably come down to about 2.5 to 2.8%, which is where you can hedge the currency today. It's about 2.65 to 2.8%. In the interim, yes, when Trump has tariff issues and all, the central bank allows the currency to depreciate a little bit more to give some support to the exporters. And that happens, but I think it's very safe to say that 3.5% is the currency risk that you take when you invest in India. But a lot of managers, like when we run our assets, we actually hedge the currency completely, so there is no risk. You upfront know how much money you're going to lose on the currency side. And the second question you're asking is more complex. India is not a very easy market to navigate. For individual investors specifically, the conversion to currency, taking it back, is a headache. Let me be very honest. I think we still need a long way to go in that direction. So that's why you need somebody who can control the flow of money well. Somebody has proper licenses, they're well regarded. That's where people like ITS come in, where they can add a lot of value by making it easier to invest and take your money out. I think doing it directly is quite a painful process still in India.
And I think the second very related question, so what actually tax expenses should expect foreign investors in India? So what's the tax withholding rate and how this process is being handled?
Yes, so on the taxes, there are two parts of the tax also. The options and future market, all the derivative markets are tax-free for foreign investors. So everything you do in options and futures is completely tax-free. In the long-only stock options, the cash stocks, there are two taxes. One is long-term, one is short-term. So if you own a stock for more than a year, it's about 12% tax. If you own it for more than or less than 1 year, it's about 20% tax. So the taxes are paid by the funds. And so if you invest in a fund, the NAV is after taxes. But there is a burden of tax, which is about 15% for investors.
I think, I just want to add that for anyway, investors should pay their taxes at home. So if we have double tax treaty agreements with India, if I'm not mistaken, and if you paid some taxes in India, it was withheld in India, so you don't have to pay these taxes again in Kazakhstan. So you can net up this gain because of this international agreements on double tax treaty agreements between our two countries. And we also expect that this process of As I know, we are trying to build this single stock ETF and indexes ETF to get our investors exposure to Indian opportunities, and an asset management company between Astana International Financial Center and India actually will take care about that forex conversion, tax withholding, and finally you will get an Kazakh instrument with all the tax preferences in Kazakhstan on Astana International Financial Center platform, and actually will be able to buy and sell Indian opportunities almost as well as you can trade US opportunities, because of course we also have to pay some taxes on US dividends and in interest income if you getting some of them, and also being withheld in the United States. So we're trying to replicate that on our Astana International Financial Center platform and make finally India the same attractive and easy as most of the rest of foreign markets. It was for me. It also was very interesting to get that India is really very fast growing market with some double digits average growth rate in the last 10 years, which actually turned $1,000 to many tens of $1,000s over that period of time. It's definitely a lot of opportunities to explore. And also I think the more or less obvious advantage of that is that we live in more or less the same time zone. So I think Kazakhstan and India live in more or less the same time zone. That means that you can trade early in the morning in Kazakhstan and the market will close in the evening in Kazakhstan. So our trading hours is very harmonized in this case, and it's much more easy even to trade in other kind of markets. What could be your key recommendation to investor who wants to try themselves with investment to Indian stocks? What will be your main general recommendation to these newcomers?
So are you asking in terms of sectors which will grow in India? Is that
I don't know. What should be the general approach? To what pay attention, how to approach?
The Indian market, I think some of the basics of the fundamental basics of investing are the same. You find sectors which have strong tailwinds. You can see from my presentation, population is growing, healthcare is going to be a very, very big rising sector. The government is putting a lot of effort in renewable energy, so that is going to be a very big sector. So just have to buy the right fundamental stocks. And in general, I would say hold on to your stock from a long-term perspective. India may not be the best market from a trading perspective, and brokers may not like to hear that, but that is the reality. If you want to make money long-term, you have to hold on to the right stocks from a long-term perspective. And India will always provide opportunity. If I show you a chart which shows the difference between the top performing sectors and the bottom performing sectors in India, every year it is 40-45%. So the top performing sectors go up by 30%, the bottom performing go down by 15%. So you have to figure out what are the right sectors to invest in a particular environment. And that is where, you may not be able to do all the research yourself. You need somebody who's an expert in the market who can tell you which are the right sectors to invest. And once you buy them, just hold it and shut it and forget it. That's the approach.
I think the last very important point for any kind of investor is access to information. So how easy to get news, disclosures, financial reports for Indian public company?
So I would say I have invested in my career for 15 years in global markets. Indian disclosures are some of the finest disclosures you'll see amongst the large companies. So if you look at the top 500 companies in India, the disclosures levels are very, very good. But you still get a lot of benefit by being on the ground in some ways, because there is a lot of information arbitrage, so to say. Because when we are investing, we are not only talking to the company, we are talking to their suppliers, their end clients, their auditor, their tax guys. That gives you a much better sense of how the company is doing. So there is some advantage over there. Yeah, but otherwise, the disclosure-wise, I don't think you will have an issue in terms of how the companies, the top companies. Of course, we have 5,500 companies. I can guarantee all of them will have good disclosures. The bottom thousands are going to be extremely risky, so which is not where you want to go. But the top 500 companies, in terms of disclosures, are very good.
So, it's. Do you have any questions to our great speaker?
I guess you will hear me if I ask this.
Please take.
Yeah.
That's right. Sorry about that. First of all, very interesting presentation. Second, you have mentioned that foreign investors hold around 17% of your market, right?
That's right.
And do you have any idea how many of these 17% are ethnic Indians who live abroad, and what's the percentage of those who are just like, non-Indian? And second, do you have any idea of breakdown between like institutional and retail, or
I would say it is largely institutional. We have a lot of money from European and US institutions. In terms of numbers, there will be a lot of Indians who are holding stocks in India. But if you combine them together, they are not going to be a very large percentage versus the institutions. Like we have both clientele, we have retail also, and we have institutional money. The reality is, if I get 100 clients retail, they will give me 10, 20, $30 million. If I get one sovereign fund, they give me $350 million. So number-wise, obviously, number of institutions are less, but the amount of money is much, much larger. I would say 80-20 split. Maybe 15 to 20% is with retail, and 80% plus is with institutions.
Thank you.
My name is Yadil. I'm from Kazakh CSD. So first of all, thank you for your insightful presentation about India.
Thank you.
As far as I know, India, in terms of capital flow, it has constraints. So in that case, what kind of account structure, security account structure you have in India?
Sorry, can you speak closer to the mic? I'm not able to.
Sorry.
Yeah.
Is it better now?
Yeah, it's better now.
So what kind of account structure, security account structure you have in India for foreign investors? Is there an option to open like omnibus account within the Indian CSD or within the custodian banks?
Yes.
And my second question, in terms of capital flow restrictions, is it possible to get back all the profit that you earn on Indian capital market outside of India?
So the second question is very, very easy to answer. There is absolutely zero restriction in terms of taking your money back. What you bring into US in the country, you can take it back. There is absolutely zero restriction on that. In the first part, you were saying omnibus account. That is the problem in India. India regulator is very, very keen that every investor who comes in, they need to do a KYC there, and they don't allow omnibus account as such as of now. But the reality is all fund managers have figured out that they can create feeder funds. Like we have feeder funds in Singapore, and if you are coming from a regulated place like Singapore, then the Indian regulator does not bother you. So you can create omnibus accounts outside of India. And so we have feeder fund for all our funds in Singapore, for example. Now we are setting up in ADGM, so we will have feeder funds through Dubai and Abu Dhabi also. But as long as you're creating a structure outside of India which can have an omnibus account, Indian regulator is generally fine with that. But they don't want directly investors coming without any information to the regulator.
So, thank you so much for this such full and great introduction of this interesting market, and we will expect some new instruments from India on international trading system platform soon enough, and I hope that all of us will be able to touch Indian markets. So thank you very much for coming to Kazakhstan, and thank you very much for introducing this opportunity.
Thank you for inviting me. Wonderful. Thank you.
Have a 5-minute break, and then we will continue with session.
Раз. Раз.
Sound check. Dear participants of this forum, you are kindly invited to take your seats to join our discussion, and we will start it in a few minutes.
Коллеги, ку-ку, слышно? Как ее сделать?
Sound check. Dear colleagues,
Ку-ку. Алло.
Кто не присоединится, не узнает, как...
if you don't join us, you never know how to earn money on retail market. You will lose a lot of opportunity. Please come back, dear friends.
Вы откуда? Фархат-Ахан. Все, пойдем. Сейчас будет исследование интересное. Пойдем. Там. Да. Пожалуйста. Рассказал, мы начинаем. Спасибо.
Что, у нас третий звонок, как в театре?
Last call, like in the theater, please. Let's start.
Все, можем начинать?
Can we start? So, dear participants of this forum, dear friends, dear speakers, it is my pleasure to welcome you at our panel discussion dedicated to the retail segment growth and best practices for investment businesses. My name is Nikolai Ruzaikin. I'm a CEO on N1 Broker. Let's start. And so, I understand that after noon, it's difficult to retain your focus not even to keep you focused, but call you back into this room. So let's try to make our session more practical, more lively. And as we have less people, you can feel comfort to ask your question. During the break, I received a joke that after the ITS, you should keep insights to be used for investment. So retail, it's not just millions of customers, but these are new challenges, technology-wise, regulation-wise, a challenge of trust to customers, to financial institutions. And the key question to be asked, which factors are the bottleneck for the retail segment to grow faster and as business grow bigger? Who and what can be done in order to make this bottleneck bigger? And this is a question that is central to our discussion today. Couple of explanation about the format. We have a powerful team of speakers. Let's give them a round of applause. Every speaker will have a presentation for 5 to 7 minutes. In between the presentations, we can ask questions, so I urge you not to be shy and ask questions as many as you can. And to set a stage, I will ask a question from the audience. Please raise your hand if you ever tried your friends, family members to open up a broker account or give advice where to invest to. You see, development of retail business is not theoretical, it's just around us, and we are working on it together. I give the floor to Kunikeyev Nurlan, financial advisor, PhD candidate in finance. Kunikeyev, over to you. Hello. So we carried out a large study, and I'll try to squeeze it in 5 to 7 minutes, and only 3% of the study will be shared during this session, and we will have a proposal to you. You can file your request and receive the full text of the study. We'll talk about the evolution of financial behavior of Kazakhstan from the money box to big investment. So I am a financier and supporting small and medium businesses, and we decided to focus on individuals, consulting households and laymen of our country and in Central Asia. From the financial behavior point of view, every day people buy bread, book a taxi, and everything related to money. These are financial decisions, and all the financial institutions take financial behavior as the subject of the study to affect the behavior of people who are the potential customers. And we try to analyze the financial behavior of Kazakhstani, traditional behavior, consumer behavior, saving behavior, and investment behavior. These are all stages and evolution of Kazakh people they are experiencing. From the traditional behavior point of view, we understand that after central economy, our parents or adults who used to live in the Soviet time, they have settings and attitudes to money, big fears, and they used to put the responsibility on the government and like Soviet party before. So this is the traditional behavior which created a big fear, and the majority of population saved their money behind the under the bed, low trust to financial institutions and banks. And there was a collective approach, I would say, when it was believed that everything is common, and it is a traditional approach of the traditional behavior. But the percent of traditional behavior is lower these days. Next is consumer behavior. It is called like Kaspi time. Historically, Kaspi would stay in the economy and development of financial sector as a big success case, because Kaspi resulted in new behavior, consumer behavior, where people are used to bank products, and lifestyle has been embedded through quick loans quick money. But when we see moderate growth, the moderate implications will follow. But Kaspi resulted in uneven growth, rapid growth of financial sector, with the distortion of financial consumer behavior of the people. They cannot live without loans. They always like taking loans and credits, and even some sushi, some food is taken for loan. And this is a negative implication of such a consumer behavior. But it was supposed to be in 5 to 10 years after the traditional behavior, but because of Kaspi case, we managed to have it in 1 year. Saving behavior. After you have all these deposits and after the loans and credits, you cannot receive any more loans. People start thinking of their first down payment, collecting money by deposits or savings, and this is where the saving behavior comes into play. Investment behavior follows, which you as brokers are interested in, and people start thinking how to multiply their capital. Saving behavior can be observed since 2020. During the pandemic, the majority of people try to optimize their expenses, not because they want it, but because of environment. And the new behavior appeared, like saving behavior through deposits, by collecting money, by keeping money. And the question is, why some countries did investment as part of daily life of people, and the others still believe that it's a game for rich? When we give consultations to individuals, they encounter challenges of mental nature, cultural nature, because majority of brokers use the system or a model or services of Western American markets. And our studies show that here we have a layer of mentality where we need to change approaches. And this is a sampling of 2,500 people through our consulting company. We divided their free capital, which they are ready to invest as part of this behavior. Traditional, from 1 million. In consumer, 500,000, because the majority is allocated in debt servicing and loans. Saving, 20 million, around $40,000. And unfortunately, the average period, like every 3-4 years, they keep it in tenge in denominated deposit without thinking of opening up the broker account investment. They know what brokers are, they want to earn some money, and they have the launch from 50 million tenge, around $92,000. And in our company, we received around 5 people who received a legacy, inherited some money. And there were 2 people where the inheritance was 2 to 4 million tenge, and people never used to have such big money, and they didn't know what to use this money for. And during the coffee breaks, we discussed that there is a lot of inheritance cases, and it's like a new trend. As for the shift to investment behavior, there is a lot of factors which affect on investing and cultural shift mentality. So these factors significantly affect people's thinking from consumer to investment behavior. And we had 2 popular questions to our respondents: how to spend money and how to clear the debt and invest. So investment in real estate was thought as investment, so there was a thinking of people. But since 2024-25, this changed drastically, and the request of customers was to invest into securities. And the 5th key factor which affected it was environment, recommendations of public opinions. We thought of financial literacy, outreach, but in terms of sampling, only recommendations, lifestyle, communication, messages changed their opinion drastically. And the key message that we would like to deliver is that you cannot ignore the market of retail investors, because the case of Kaspi demonstrated that it can serve as a catalyzer and change the behavior of your customers and impact on their financial decisions. Yet another key aspect is that you can use the works of behavioral economics, financial institutions, commercial institutions, research, referred to research institutions to find tools how to influence the people's behavior. And it's important to take into account the mentality, especially in our region, what Kaspi successfully did. Why to create a will if you can take the journey of the Kaspi, but on the retail market? And if you have any ambitious ideas, you can accelerate the process and evolve from the consumer behavior to saving up to investment behavior. So accelerate it and take it in 2 years' time. We carried out a survey before this conference, and many brokers think of tax incentives, and many brokers answered that the financial literacy level is moderate. Level of financial literacy and willingness to invest long-term is average. We should not ignore the potential of retail investors. My apologies. Yeah. So we should not ignore the potential of retail investors. This is very important to get your share in the market. Also, we want to say that our research center is analyzing the private cases, and you can get our studies on the region to build products which the retail investors may be interested in. Thank you so much, Kunike. I would love to ask the following question. Economic theory pays a lot of attention to the rational behavior of investors and households. What is the key gap between theoretical discourse on how the rational investor should behave and practical behavior of Kazakh investor, and how this should affect the products that brokers or managing company want to create for retail customers? As I said, the majority of our investors use the study of European scholars, economists, American market, developed economies. Unfortunately, in the academia, we have little experts on financial behavior. There are differences, huge differences, if we talk about the sampling and study which were carried out. Therefore, we're actively working with universities and communities, and we want to offer initiatives to carry out studies in our region. And theory can differ from practice. Theory can be pushed forward. You can give a lot of hypotheses, but there is little experiment. Therefore, there is case study methodology, an experiment, then that in 2 years you take a household, allocate certain number of money. Okay, 10 families giving one investment consultant, one financial consultant, another family is given $100 per month, and the other one is given 100,000 tenge. And this is how you can identify their financial behavior until they reach the investment behavior. So we don't have this like very comprehensive studies, and if you are interested in, please finance, please sponsor. Yeah, indeed, few studies on the investment behavior in the local market, maybe except for the United States. Thank you so much for your hard work. Any question from the audience? Please, go on. We have one hand raised. Please, can you pass the microphone? I have a simple question. How would you assess the potential of rich people, wealthy people? What is their investment base and how much money is available for investing into the broker products? I can refer to my numbers as I presented before, 2,500 customers, and the average is 20 million tenge. I mean, no, there was $100,000, but okay, what about $1 million? Our sampling was rather narrow as part of consulting, 4.4 or 5 million tenge. But a study for Kazakhstan to assess the real potential, it's difficult to do. But we can refer to statistics of deposits of individuals. However, I mean the following when consulting the individuals. Kazakh-speaking audience And those who have farms or livestock husbandry, their turnover can be 24 billion tenge per year, and they don't have even deposits, and we have a big gap between brokers and laymen who have a lot of money. This is why I say 2017, I'm a former banking officer. I remember a conference where Kaspi declared ambitiously, I am going to take the retail market. The other bankers said, why? People don't have money, and what you say is unreal. And we are now in 2025, and we take Kaspi as a case study. And with our level of population, with low financial literacy rate, the potential is very high. And in developing countries, it's easier to get rich versus advanced economies.
So I think that there is some potential, but I cannot confirm it with figures. Only I can say that from 20 to 50 million tenge according to my practice. We also did different things. We had different approaches to evaluate the number of clients. So medium class plus segment, we thought that it's 250 to 350,000 clients. So these are people with the savings 20 million plus. Let me give the floor to Muhammad Ibrahim Issa. Muhammad Ibrahim Issa, senior economist of AAO IFI.
The presentation will come here. Okay, thank you. Bismillah ar-Rahman ar-Rahim. Nahmaduhu wa nusalli ala rasulihil kareem. First of all, I am very thankful to invite me in this important conference. And since I have only 5 to 7 minutes, so I have to complete my presentation. And the topic of my presentation is the Islamic investment. And the Islamic investment, now the topic which is now more attractive for the investors globally, and also local people from the Kazakhstan. They ask number of questions about the Islamic investments, and since the majority of the population in Kazakhstan, also in Central Asia, are Muslims, so they are very much interest. They have very much interest in the Islamic finance and Islamic investment. So, and what can I share with you is that not only Muslims, non-Muslims are also very interested, and they are taking interest, and they have demand in the Islamic investments. So let me describe why Muslim investors are interested in Islamic finance, in Islamic investments. Why? Because Islamic Muslims, they need the investment free of riba. Riba is the interest which is haram in Islam. So Muslims, they need an investment which is free from riba, free from gharar. Gharar is the excessive uncertainty which has also been prohibited by Sharia. Also, Muslims, they need the investment which is free from unethical or non-permissible sectors. What are unethical sectors? What are unethical sectors? What are non-permissible sectors, such as alcohol? Investment in alcohol is not halal in Islam. Investment in the gambling is not halal in Islam. Investment in the conventional banking and conventional insurance companies or conventional leasing companies, this is not halal in Islam. So Muslims, they need the investment free from these non-permissible items. Also, Muslims, they cannot invest in the weapons or harmful industries. So that is why, and this makes the Islamic finance a growing global model for ethical and sustainable investment. So, and why non-Muslims, they need Islamic investments. And interestingly, I am working in United States, I am working in UK, I am working in Europe, and I am working with those companies which are owned by non-Muslims. And after the crisis of 2008, non-Muslims are more interested in the Islamic finance. Why? because the Islamic investment system is asset-backed, and the interest is haram in Islam, and the derivatives are not Sharia compliant, which were the result for the 2008 crisis. That is why non-Muslim investors are also interested in the Islamic investment due to transparency, is financial dealing, and also the Islamic investment gives the protection from high speculation. Also, ethical standards we follow in the Islamic investment. We cannot invest in the weapon companies. In conventional investment, the weapon companies is allowed to invest. Someone was asking me about the Boeing. In the company of Boeing, we cannot invest because they are manufacturing Boeing airplanes, but they are also involved in the weapons. So we follow the ethical standards, and we cannot invest in such companies. Also, Islam gives the sustainable returns. Islam is not the short-term. Islam does not have the short-term vision. Islam gives the sustainable returns, and also now non-Muslims need diversification. They have invested too much in the conventional system. Now they need diversification, and now they are coming in the Islamic investments. So we are talking about the retail investors. In Islamic investment, retail investors are more than the corporate investors. Why? Total Islamic, if you see, the total Islamic financial assets increased from about USD 2 trillion in 2015 to nearly USD 4.9 trillion in 2024, and are projected to surpass USD 5 trillion in 2025. So in 2025, we expect that the Islamic financial market, which includes the Islamic investment, will surpass more than 5 trillion USD. As of 2024, the global sukuk market was valued at approximately $1.21 trillion. And also total assets under management in the Islamic management, Islamic asset management, is around 200 to 250 billion USD worldwide, but it is growing globally. If we see the Islamic indexes, and you can see that most of the indexes are owned by non-Muslims, and they have launched. And if you see, according to the LSEG Islamic market data, there are over 4,500 Sharia compliant indexes globally now. More than 4,500 indexes. Some of the indexes that I have mentioned here: Dow Jones Islamic Market Index, this is in USA, S&P Global, BMI Sharia Index, USA, FTS is Sharia Global Equity Index, this is also in UK, Ideal Rating also in the UK, LSGD Sukuk and Islamic Index, that is also in UK. And if you see the Asian region, you will find the FTSE Bursa Malaysia. Malaysia is the big market, and in the Malaysia there are number of indexes. Also in the Indonesia we have some indexes, and also in Sri Lanka, which is the non-Muslim country, but we have Sri Lanka Sharia Index. We have in Bangladesh, we have in India, we have in Pakistan. And in Middle East, there are number of indexes, but some are very common: Tadawul Islamic Index, Ar-Rayyan Qatar Islamic Index, Kuwait Islamic Index. And in Africa, you can find JSE Sharia All Share Index, Nigerian Islamic Index, specialized, and some other indexes which are very, very specialized. And all these indexes are Sharia indexes, nothing to do with the conventional. And in this slide, you can see that these names are the major Islamic asset managers worldwide. And you will see SNB Capital, Rajah Capital, Riyas Capital, Jadwa Capital, Public Mutual, Maybank Asset Management. And these are 15 big asset managers worldwide. Some of them are in Middle East and some of them are in Europe. So you can see that the Islamic retail investment market is growing. And about the Islamic funds, you can see in United States, I am working in United States, so I met with the Amana Growth Fund people. They told that they are managing the Islamic fund, Amana Islamic fund. The size of that fund is the $9 billion in the United States. So they have Amana Income Fund, they have Amana Development World Fund, they have Amana Participation Fund, Iman Fund. All these funds are in USA, Wahid Investment, very, very famous fund. In Middle East, you can find number of Islamic funds, Franklin Global Islamic Fund, Emirates NBD Global Sukuk, and there are number of Middle East Islamic funds that you are looking on the screen. Also in UK, there are number of Islamic funds, HSB Islamic Growth Fund, iShare, MSCI World Islamic. It is the ETF. In Indonesia, there are some funds. In Malaysia, you can see. And I could not gather all the list of all the funds, but some funds I have mentioned to explain how Islamic finance and how Islamic investment is growing in all over the world. People normally ask, what are the Islamic instruments? Islam is the limited, people think that Islam is the limited religion and Islam has limited options. No, Islam has many options for the investment side, for the finance side, for the insurance side, for the sukuk side. So you can see that we have number of Islamic capital market instrument. First is the sukuk. Now the sukuk is growing, and the sukuk, new sukuk instruments are coming in all over the world, and UK is now becoming the hub of Islamic sukuk market. Also Islamic equities, we can invest in the Islamic equities, we can launch Islamic equities like ITS Sharia Index, includes the Islamic equities. Also Islamic mutual funds are available, Islamic ETFs are available in number of countries. And Islamic REITs. REITs mean real estate investment trust. Islamic REITs is one of the Islamic instrument. Also Islamic private equity, Islamic venture capital, Sharia compliant structured products, Islamic index fund, Sharia compliant commodity funds. And you can, maybe you know that in the London Metal Exchange, now there are number of Islamic commodity funds. In the Malaysian Bursa Malaysia exchange, commodity exchange of Malaysia, you can find number of Sharia compliant commodity funds, and investors are growing day by day, and Muslims and non-Muslim investors and also the corporate and retail investors are getting more interest in the Islamic funds. So Islamic investors are becoming a driving power in global markets. Their disciplined demand for halal, ethical options has attracted international attention and created new opportunities from sukuk markets to Islamic fintech and takaful. Also takaful is growing, Islamic insurance is growing. I have seen that there is no Islamic insurance product available in the Kazakhstan, but I wish that there should be some Islamic insurance product as well. Globally, the Muslim population is growing, and it is growing, and now it is around 2 billion population. So for the 2 billion population, we should have some funds, some Islamic instruments, and Alhamdulillah, with the help of scholars, with the help of experts, we have achieved the goal. We have the instruments, we have the number of players in the market. So due to the help of these things, we can develop this thing. Now turning to the Central Asia, several Central Asian states are majority Muslims, like Uzbekistan, Tajikistan, Kyrgyzstan, Turkmenistan. So since they are Muslim countries, they need Islamic investments. And there is a huge demand in all these countries. Especially, I usually visit Kyrgyzstan and Uzbekistan, and always people ask, in Uzbekistan and Kyrgyzstan, where are Islamic investments? Because in these two countries, no Islamic investment product is available. So this is the good opportunity for Kazakhstan market to go in these countries. And at the end, I would share the demand of Islamic finance and Islamic investment in Kazakhstan. Why there is a demand? maybe before 5 years, before 10 years, I understand that the demand was less. But now demand is increasing. What I am receiving questions from my Kazakhstan friends. They are asking about the number of products. Whenever I sit on any sitting, so the sitting does not complete before 2 hours or 3 hours, because Kazakhstan friends, they ask many questions about the Sharia. They wanted to learn about the Sharia. So why Islamic finance and Islamic investment is needed? Because the 70% population are Muslims in the Kazakhstan. Government is also supporting. AIFC is supporting. Also, central bank is supporting, and they are preparing some other laws. That is why in Kazakhstan, the Islamic finance and Islamic investment demand is increasing, and this is the best time for us to bring more and more attractive investment instruments for the Muslim community of the Kazakhstan. Also, in the last slide, I will explain, because many audience told me that what about ITS Sharia index, whether it is Sharia compliant or not. Yes, I can clarify that the ITS Sharia index is a Sharia compliant, and ITS Sharia index is supervised by Sahih Invest. Sahih Invest scholars, they supervise, they check the screening, they check the companies, and what they do, the screening process of the companies, we ourselves, we are also working for the ITS people, for the IPS capital, and we are advising them. So we can certify that the ITS Sharia index is a Sharia compliant, because all the companies are Sharia compliant in the index, which are in Sharia index. Also, we also regularly make the Sharia audits, and also the ITS Sharia index is aligned with the global practices. We follow the AOF Sharia standard. AOF is the body which is in Bahrain, and AOF issues the Sharia standard. So ITS Sharia index is under the AOF Sharia standard. So that is why I am very much satisfied with the ITS Sharia index. So thank you so much for this presentation. Very nice again, and I am very thankful for the management of this organization to invite me. And also I am looking the huge interest in the Islamic investment, which is now increasing in your country. Thank you so much.
I have a short questions for short answer. How do you measure, how do you score Sharia compliant instruments? What the methodology is, maybe in a few words?
Okay, very good question. That how we can consider and how we analyze one company and one security or one equity Sharia compliant. So what we do, so we see that the basic business of the company should be halal. For example, if the company is manufacturing mobile or tablet, or for example cement, or for example people ask about the Tesla. So be confident that Tesla is Sharia compliant, because Tesla is manufacturing the cars, vehicles, electric cars. So the first criteria is that the basic business of the company should be halal. Second criteria is that the interest-based loan should be very low. And according to the AOF Sharia standard, if any company is taking interest-based loan, so the interest-based loan should be less than 30% versus market capitalization or total assets. And simultaneously, we see the balance sheet, financial statements of the company, and we see that if the non-compliant income, because you know that whether the Tesla, whether the Apple, whether the Microsoft, every company invests something, some amount in conventional bank. So there is a criteria that if the non-compliant income is less than 5% versus halal income of the company, then this company may become halal. So this is the criteria that we follow, and after every quarter, we see the financial statement, latest financial statement of the company, and you also observe that one company was in the list of Sharia, and after one quarter, it was not in the list of the Sharia. Why? Because they changed the methodology. This company invested more in non-compliant investments, or that company took the interest-based loan from the conventional bank. So this is our criteria. By that criteria, we analyze whether the company is halal or haram.
Thank you. Thank you again, Mufti Ibrahim. Я передаю слово.
Let me give the floor to Alexander Diakovsky, Managing Director of ITS. Over to you. Thank you, Mufti Ibrahim, for your kind words to our ITS index and ITS fund. I'm not going to advertise us too much, just two figures. At the last conference 1 year ago, here at Hilton, we presented our first index fund, ITSW. It brought to our investors more than 18% of profit in USD.
And ITS's Sharia fund was launched last year and brought around 12% to this moment. So it's not just right investment, but they are profitable investment. And the brokers, which I know here, who are getting connected to our platform, who think of connecting to our platform, we are ready. If you want to offer to your loving customers index funds, and Ayan knows, then there is nothing better than index fund in the financial world. From the investment point of view, we can discuss how we can offer this OTC instruments or in our platform if you are interested in. Today, I'd like to talk about some prospects of strategic nature, because the topic in the session is how retail segment is growing, what are challenges and what are opportunities, prospects. In my thinking, it would be good to consider longer perspective. I think that it will be all right to say that the trend that we're having in retail, it started in 1990s, where there were three acronyms: DMI, direct market access. ITS played its role in the global market as well. And if we look what's happening globally, having these two acronyms, they reshaped the industry of finance in a significant way. Last year, the turnover of stocks in the global largest market in the United States was smaller in prime platforms than OTC. And this helps retail to have transactions internally and so on. They're quite a lot. And they take the service to their own site. And assets managed or controlled by retail investors turn into the strong driving force in the global capital market. This would include all the markets affected. In Central Asia, the story is somewhat different, but anyway, I think that the trends tell for itself. Rapid growth of retail market we observed in 2020 with COVID, where people were sitting at home and started learning what's happening through their computers. And as always happens, this dawn was kind of a indicator of the market maturity. After that, the market slowed down. We watch the drop of the margin because of the DMA and global providers have a hard fight for 10% of the market, and retail is coming to demand something different. So what happened in 1980s, 2010s, it's from the revolution of supply. And this really changed the ways to earn money and how investors look at their own capacity. I once met a very interesting person in Switzerland. I studied in digital transformation AMD, and I met a young man who was a managing director of assets in the third generation. And he sadly told me that over the past 2 years, 3 largest customers of his family business, which was developing long, they left the company, they exited the company, they have taken assets. And a friend of my father said, "You have very good coffee in your office, but I'm not going to pay 2% of my profit for your good coffee, because I now know that I can pay 0.2%. And this reflects what's happening in the market from the demand point of view. And this was in 2017, I mean, the study. And there was a lot of talks about artificial intelligence, AI. And let me be honest, I don't believe into AI at all. I think that it's kind of mis-selling. Well, language models can be implied under this AI, which has nothing to do with artificial intelligence per se. And this is what millions of retail investors need in the market. They should carefully navigate among the abundance of information they receive every day and turn these languages into the understandable information based on the clear analysis. All these systems are still imperfect, a lot of hallucinations and so on, but it's getting clear that in 2-3 years this issue would be addressed. New systems would come based on good data, good sources of such data, and the situation would change. Looking at every living system, living organism or innovation, it goes through S curve. So it starts with study, it doesn't bring any good result, I mean visible result, then rapid growth with clear performance, and then it goes to some plateau, some flat line. And when this flat line ends, then there is a shift to a new curve, a new system. In my opinion, in 2025, we are in a situation of such technology gap or technology break, when the old revolution related to revolution of supply is getting exhausted globally, and this creates preconditions for a new audience to come to demand new requirements from the market, and new technology opportunities appear. How these demands can be addressed or met. And I think that in any case, such technological break or divide is reinforced by competition and appearance of new models. We can always hear when we met with brokers, they have a different business, like they are not ready for retail because it's a drastic change of the model. And new opportunities related to interfaces that are based on LLM can help build this economy. And this way or another, traditional players or new players, this economy will change in favor of retail anyway. That you can create an interface and customize your services from reporting, back office, up to analytics and rebalancing of your accounts, enabling every investor with any check to receive the same high-quality service. I think that this would boost retail development, and we can observe it here in Kazakhstan and in Central Asia because we are part of a global context. And I believe that this would give another impetus to the retail market development. And we as professionals of this market, like in Alice in Wonderland, run very fast to stay on the same place. This is end of my intervention. Thank you so much. Let's give a round of applause. Alexander, thank you so much. Very, very interesting thinking. And I'd like to ask a question. You, as a person working with fintech and trading platform, is a big fintech for sure. What innovation over the past few years you would call as overvalued, and which innovation is underrated from the retail segment development point of view? Very good question. As I said, for me, I think that big innovation built in 90s, they reached a certain flat line, and this is the problem. There is no innovation. New ETFs come into play, but no good news. The number is growing, and they are struggling. I mean, the ETF providers are struggling for their customers by dropping down the price by innovation, and this tells a lot. Because when the first ETFs came, they were thematic ETFs, which gave exposure to different markets, geographical or thematic. This was real innovation, and this innovation ended in the middle of 2010s. And we don't see such innovation anymore. Our platform is based on innovation technology, but this is DMA, which was established, I don't know, in 1990s. Well, it's clear that we're giving access to seamless global market, but to say that we're doing something new which has never existed in the market, well, it's rather challenging to say, even though our technology is very, very breakthrough in this respect, disruptive in this respect. So answering your question in the following way, in a very equivocal way, I don't see any big innovation in the financial market. Single stock ETFs can be treated as some innovation which are undervalued. Thank you so much indeed for this flattering from retail with an average check of $100. I would agree that it is certain innovation from the local market perspective. I mean, here in Kazakhstan, AFC, because investors receive $100 for an opportunity to diversify their portfolio. If they buy ITSV or ITSV or XX, it would be great, because for dozens of dollars you are exposed to a bigger market, because ITS would cover 4 regions, Kazakhstan, Asia, Europe. And if you want to buy Netflix, then you need $1,200. Now you need just 12. This is innovation per se. I'm quite humble. I wouldn't say it's a breakthrough. It's just innovation. I didn't say breakthrough innovation. Thank you so much, Alexander. Give you a round of applause again. I would like to give the floor now to Farhat Okhonov, Halyk Finance. Please. Thank you so much. I don't have any presentation on me. I was told we will have an open discussion. We can start with questions immediately. Yes, please. Okay, in my hat as a moderator, I will take the key question. Halyk Finance, I think it's difficult for you to manage a very huge customer base. It's difficult to overestimate the influence of Halyk Finance for retail segment. What factors do you see as a bottleneck for the development of this retail segment? And in the horizon of 2-3 years, what are your visions to develop product line? which will make this segment even more involved in investments. Thank you so much. Well, I would like to start by saying that over the past few years, this landscape, like in which the broker business exists in Kazakhstan, especially retail, starts changing. In the first place, through digitalization in the financial sector, I think that brokerage comes into the digital last because banks were first. Number two is that commercial banks, second-tier commercial banks, if I'm not wrong, since end of 2020, the regulators allowed to offer brokering services, which is a very important thing, which changes the landscape of business in Kazakhstan, brokering business in Kazakhstan. And this will continue. Some people in Kazakhstan are still not aware that commercial banks can offer brokering services. Two banks use this opportunity, Halyk and BCC. In their application in Halyk investment tab, when you drop in, it's not Halyk Finance, it's Halyk Broker. When you go to BCC application, Banks and Credit Investment, it's not BCC Invest, it's BCC. And some brokers, like Halyk Finance, start competing with Halyk per se in terms of retail operations, optically like BCC Invest, with their mother company, BCC, Bank Center Credit. But I wouldn't call it competition. I would like to call it like segmentation of the market. This is the first step made, and I'm more than confident that mass customers, commercial banks that are going to develop this service, they have already taken this bigger part of clientele with all the necessary prerequisites. Probably I should start by saying that retail brokering business on its nature is very low marginal. Very low margin, very low fee. In the West, for instance, you know that broker has a zero commission and they put their fee into the price, but this is prohibited by regulator here or through some additional services or whatsoever. And banks can afford do this service further down the road, not because of low margin, but maybe because of loss making. But still, we should remember that commercial banks, they are focusing on just one thing, which is called ecosystem. This is their key focus, that they develop and will continue developing the ecosystem. Now the mobile applications of top banks are far from applications that they used to be a few years ago. And we all use mobile applications of banks for quite some time. We don't go for banking services per se, like cards, banks, public services, commercials, taxi booking, buying tickets on trains or cinema. Banks want their customers to spend as much time on their screens as possible without going to any other applications and investments. This is one of the features which keep the customers more in their application. But it is important to underscore that it's not this service that banks are going to earn their money, for sure. Maybe this is why, despite this novelty which regulator adopted like 4 or 5 years ago, as I said, like two banks used this opportunity to the fullest. Banks which have clear understanding that they do this to develop their own ecosystems. From economic perspective, this is not profitable. On dollar deposits, the banks in Kazakhstan offer the maximum rates of interest 1%. The interest rate on American treasuries around 4.1, 4.2%. It was 5.3 like a year ago. The difference which banks have on dollar deposits, like 3 basis points. The average broker fee is 0.1%, and the bank, which is developing brokering service, brokerage, is risking to shift from deposits in 3 point few basis points to imbalance. on off-the-balance transactions with the fee of 0.1%. I think that it's obvious that from a perspective of the economy, the scale is not favoring this development. I think that this is one of the reasons why not every bank has implemented this feature. I believe that we will see more banks, more than 2, with the development of these ecosystems. And number 2, the customer profile is changing as well. And the focus of the company, broker company, for such customers, and who we're left with. If banks will take the wider audience is interested in easy money transaction without going outside, replenishing your account, buying some stocks, and low fee. This is what the wider audience is interested in. And the richer the customer is, it's obvious. I'm sure that my friends from brokering companies would confirm. The richer the customer, the less he cares about numbers or technologies. For such customer, it's important to see eyes of the manager sit vis-a-vis. He is making a decision for $500,000, right? And many people will send through mobile applications for larger amounts. They double check if you buy an iron, maybe you can buy online. But if you buy something expensive, like for 15 million tenge, the person would prefer to go to a department store, touch it, try it, and see it. Same story here with investments. Premium customer is the segment that traditional brokers would headhunt for. They will fight with banks and with each other. And this is where the landscape is broker retail business is changing. Answering your first question from the audience, we share the same opinion. We made a comparison and in-house study. In Kazakhstan, they should be at least $40,000 or $50,000 millionaires. I think that this segment would be a priority for those traditional brokers who can oppose to the large commercial banks. Things like analytics applied, closed management of a certain portfolio, some advice, tax declaration, assistance, and so on, some advice. Additional services which banks' applications, especially on the initial stage, may lack.
Thank you, Farhad. So there are proposals for the development of retail things to be prohibited for banks. No. This is a good idea. It helps with the competition in our segment. Only consumers who win because of conference. Who's got brokerage account at Halyk Invest or Halyk Bank? You can ask a question to Farhad. I've got a question to Farhad. Farhad, what about the conversion rate for the banking client to the brokerage services? Now, this conversion rate is very small. We've got a lot of open accounts in Kazakhstan, and there is a mixed statistics. Now, the official figures on open accounts is more than 2 million accounts in Astana, including Omnibus and others. We don't know about individuals because there are clients who have 3 or 4 accounts in different banks. What about the number of actual people? Difficult to say. And the main challenge is for the brokerage companies and banks is to make sure that they are not empty. In Russia, there was a boom. Many banks used to open brokerage accounts. VTB and the Sberbank, there was a huge number of accounts, but the number of trading clients, those who have at least one operation per month, was significantly lower, a very small amount. In Kazakhstan, it's less than 10%. less than 200 people do transactions once a month. What is the average bill on the non-zero accounts? There is no estimation of that. But answering your question, this conversion from banking client to a brokerage service client is very, very slow. Maybe it's not because of financial literacy only. Of course, that's something we need to work on. And I'm happy that not only brokers and banks do that in Kazakhstan, but also private companies and consultants. It's a big amount of work. And we are seeing that with the rich people, although it's paradoxal. For wealthy people, it's very difficult to make this first decision because they work with banks for 20 years, they know the manager knows his or her family, they know that at any point in time they can take a deposit back, they have a cash stored in the bank. But when we speak about nominal holding, it's like you don't own this paper or the security directly. There are custodians and clearing houses in order to get your hands to the American security. In some systems, they don't see your name. You are hiding behind. Then there are fees, different technologies. There are sanctions even. In Euroclear, some accounts were blocked. So for a client, it's very difficult. Even if this is US Treasury. We all assess the market potential very well. We can say it's like 50,000 millionaires, but this conversion work, I think it takes too much time. So speaking of conversion again, I think that it depends on the management wheels and its strategic goal. If it's a big bank, then it's a chicken and egg problem. And but if the segment is small, it will continue to be small, receiving less focus. Together with the partner banks, our conversion was 5% among premium clients. But the global practice is that when it's 30%, it's a plateau for you, and after that, it's very difficult to get additional ones. So it's a question of the management focus. I think that big banks just are not part of it. A question? When some people say that brokerage doesn't allow you to get more money, it's like 0.1%. Is it big in your case? Yes, it's bigger. What do you do? Well, big clients often don't have a desire and time to create a portfolio and dive into the products types, and they agree to get a so-called box product with internal margin. So by including them in your portfolio, you can increase your profitability. So there are different instruments, long, short instruments. There are ways to increase your margin. You need to learn working with them. For instance, marginal operations. They are not prohibited. We are under the regulation of FIRE, but how to do it correctly, well, you can't ask anyone. So we try to be inventive here and creative. 3%? Sometimes. Thank you so much. Anyone else willing to ask a question to Farhad? I'm happy that we have such a live discussion. Farhad shared a very interesting story about the profitability or margin in the banking sector. So my question is, what was the idea behind this instrument in the banking sector? Because you had a subsidiary that does it, knowing the margins and everything else. This was done in order to develop banking ecosystems, because banking ecosystems change every year. So you go to your app not just to get the conventional banking services, and banks would like to offer more. We buy things through marketplaces like fridges, TVs, and I think that the regulation will change. This was a starting point. We are not getting integrated for a purpose. It's our intention. This business within Halyk Group is divided. There is Halyk Finance, focusing more on a premium segment. We do not close doors for the other clients. Please, if you'd like to work through Halyk Finance and trade, you can do this. We allow to do that. But this client understands that the fee at a Halyk app could be much, much lower. So you will have less fees when buying the securities or stocks. That's why I'm talking about the clients trading small amounts, and they, at a certain point in time, they feel that it can be profitable, especially after the COVID. Clients started playing and trading. We saw clients who bought stocks for 300 USD, and then they got $20 profit, and then everything, and then all this profit would be paid as fees. So, single stock ETF, it's a novelty, I agree. It helps to get many clients, like mass clients. So we give this mass clients, but organically, without forcing them. Mass market customers. Naturally, we give it to Halyk, but keeping the clients who understand that they pay fees, but they know what they pay for. Because sometimes they don't get advice for their portfolio and Halyk, but we offer account manager, helping with the taxes, analytics, recommendations. Thank you so much, Farhad. I can share a more provocative opinion to the first question. It's my experience. I'm not saying that it's a good practice of Halyk. Well, a brokerage business is always attractive for the project development. And in any society, a bank is a big organization, big community. At a certain point in time, there will be people who'd like to compete for the same business. Some are successful, and that's how the competitive units can emerge in one organization. It's a practice in banks, but also it's a practice in other bigger organizations where the policy changes. Thank you so much, Farhad. Maxim, I hope you are still enthusiastic. Do we still have time? I'll try to be short and efficient. I represent Maxim Dromin, General Director on Strategic Development. Do you have a presentation or just, yeah, a short presentation? Via investments. I will continue this topic of investment market from brokerage perspective. I have 20% of experience of brokerage service in Russia and Armenia. The market changes and the broker's service changes. There are three factors. First, conversion of clients to banking ecosystem. They want to have everything in one place. In the past, brokers competed among themselves for a client. Now, everything is based in banks. There is no even competition with the banks. Then, box products as well. In the past, clients wanted to trade himself. They want to buy and forget about it. And communication channels changed. In the past, a client had a personal manager to obtain information. It's like they coexisted. But now there is Instagram, there is Telegram, and other channels. And clients have many options where to get the information. And then they can implement it anywhere. So the role of a broker changes. And now we choose a model. First, niche broker that services a certain niche of a clients, like HFT traders. Or it could be a second model, is a broker as a service. So we provide services to all of those who have this client. So how much does it cost to create a broker if you know everything? If you have a team, if you have technological solutions, it takes 2 years and 1.5 million USD. If you have nothing, you just want it. So in reality, it's at least 4 years and 5 million if you have nothing. So this threshold is quite high. Broker means technology plus IT team. Second, business processes that have been already established and tried for many years, and people who understand these business processes. And for the developing markets, it's the biggest problem. In Armenia, we face a situation that on the local market, we cannot find specialists in risk management or marginal trade or compliance. So that's why, even if you have money, it's difficult to arrange a brokerage service. Integration is and set up quite lengthy processes, and product line cannot be there in a second. Therefore, we divide. We have a distinguishment, a broker with all the structural elements that can be a service. On the other side, there is a client or people who have clients, who know how to look for clients and how to market for them. And then a broker may not create an infrastructure and just work with that other side and pay less. So 3 types of demand for brokers are banks with clients less than 1 million. For them, it's ineffective to build their own broker business. It's easier to outsource it than fintech startups who have great ideas and some innovations, and they can build them with an external broker, an investment consultant, influencers, bloggers, anyone who have an audience behind, who trusts them, and they need to channel them somewhere in order to monetize this audience. So at Invia, our business model is being rebuilt. We will be a broker as a service. So we'll work with clients who have physical persons under the umbrella. We say to them, launch with us. It will be quick and effective. We'll give you a service that you cannot build, or it will be too expensive for you. So We will help with trading processes. We will help with the front-end solutions that we adapt to your final customers. We will close your back office story, so the reports will be generated online for customers, then integration with key systems of the banks in order to upload the customer data for the records needed by the bank. And also we will help with the business process such as risk management, marginal trade, which is a core of the product to be consumed by clients. In terms of implementation model, a bank can give a client to a broker. We don't see any risks here because bank's client is the bank's client. They cannot be transferred to a broker because their main product is banking. Don't afraid, banks. You can give us clients to our platform. We are not going to take it away, but those who are afraid, there are just instruments like omnibus accounts for clients. So we can offer a service to clients without any concerns. Then revenue sharing, it could be also fixed payments or fixed pricing. A bank can evaluate what is the minimum amount to pay for a broker and just pay an external broker and have no issues with the team. As an example, until the end of this month, we are launching this model with one of the top 2 banks in Armenia, with a number of clients more than 300,000 USD on the basis of India. They are going to launch the investment platform, and their clients will be serviced by India, having an opportunity to get access to the markets for 7 minutes. Just by clicking on a button, account is opened, basic provider is ETS. Then clients can trade in 3 minutes after the account is created. This will be a unique proposal for the Armenian market when a banking client will be able to run through the entire procedure, like from the desire to trade to actual trading, 7 minutes, without any additional documents, because all the banking information has been uploaded from the bank system to the broker system. So the implementation time is 5 months. It can be reduced to 3.
Comparing to 2 years of building your broker, it's a real difference, an integration of $350,000, which is comparable to creating your own broker business. So our vision is that this broker as a service is the next model for the next 10 years, based on the changes in the landscape of investment in general, and finding a niche without building a very expensive infrastructure. That's it from me. Thank you so much. Maxim, thank you so much. And I have the following question to you. Very interesting about broker as a model, especially for banks. My current observation is that everything is changing when you say, give me your client, but they will remain yours. And banks are not ready to go for it. What signals you see that it's going to change? The key signal is competition between the banks. Banks, which is not going to have customers investment sector, will lose this customer to a bigger sector. When banks is counting how much this costs to give the service, it could be 200,000 customers. It's not marginal, it's not profitable, it's loss-making, and this is where there is a breakdown of this argument that it's dangerous and he will lose his customer anyway. Okay, let's look in Russia. They use Tinkoff, Sber, and VTB because they offer this investment service. In Kazakhstan, Armenia, Uzbekistan, most likely, during next few years, it will be the same story. And therefore, it will be an alternative to lose 70% of customers or 15%, and customer will move, and every broker will be ready to sign a document with bank, no competition, no other services beyond what is written, and this is a way to protect banks. Okay, thank you so much. Questions from the audience? Please. Hello, my name is Vadim. I represent SkyBridge. So, broker as a service, in your thinking, do you think it's a temporary decision for Kazakhstan as soon as bank understands that it's an interesting gold mine and customer base is growing, there is a risk that they will take it without sharing with others? It's like they started with big yes and then take it all. Right, there is a risk, indeed, and we can see it clearly for banks when they cross the line of 700,000 to 1 million customers. Then yes, for a bank, it would be more profitable and more technology comfortable to keep the business in-house. Okay, the bank will grow and the smaller will come in place. And the segment of investment consultants, financial advisors, is growing and more promising than the banking sector, because there are customers motivated with money, and the percentage of conversion, as we see on the experience, it will be 30–40%. I mean, they will make a bait to have a joint product with a broker, come, and in today's 30% who heard open up accounts, replenish it, and this is a bigger growing segment and niche. And banks, I would agree, rates of conversion is rather small. Thank you so much. Any more questions to Maxim, please? The floor is open. Okay, then, if no questions, I would like to thank the audience for active listening and for asking questions. I would like to thank our speakers for a very interesting discussion. I think that we managed to make it live and very practical. And see you soon. Bye-bye. Dear friends, we have last coffee break and last short session led by Roman Gorinov. It's a dialogue between brokers and influencers. See you back in 50 minutes. Now we have a coffee break.
Раз, два, три. Раз, два, три. Раз. Раз, два, три. Раз, два, три. Раз. Раз, два, три. Раз. Раз, два, три. Раз. Раз, два, три.
Раз, два, три. Раз, два, три. Раз. Раз, два, три.
I see what speakers we have. They are so responsible. They are already taken seats, but the audience is still drinking coffee. Okay, we won't go home faster. Okay, let's call these people back because we feel so lonely here. Yeah, that's right, that's right. Investment is good, but dinner is always here and very delicious. We are missing Bek Sultan. Where is he? So not all speakers are responsible. Well, we have a very challenging task to complete because the final session, the majority of people wanted to finish as soon as possible and then start the drinking party, and every word is perceived very challenging, and we should be more active versus other previous speakers. Otherwise, our audience would not comprehend that. We still have people missing, and I have one very simple thing to do. Today, my friend Nursat celebrates his birthday. Let's give a round of applause to him. And so you can see we use this chance to congratulate the friend while you were coming. The second challenging task is that to organize somewhat scandal on this stage. A session was titled Influencers versus Intermediaries or Go-Between, and I'm looking for who is ready to start this fight. No, we are not fighting, we're developing this market together. That's the point. If you make friends with everyone, it would be boring. We need some fun. Okay, friends. Let's start with introduction of our panel. And we have many people, little time, and we should give everyone a floor and keep talking myself. It's difficult responsibility to be a moderator, introducing people and keeping silent afterwards. Okay, let's start. Beksultan Anwarov, CEO of PIDAX, one of the first brokers, a company which builds in Kazakhstan, or is trying to build in Kazakhstan a new business model, a full retail broker. He will share his insights, what's happening, what's working, what is not working. Maybe another model should be built. And Nash is also a first broker. Yeah, we are first everywhere. We are pioneers everywhere. Okay, Nurhat Kushimov, general manager of Binance Kazakhstan. Arslanbek Abdikaparov, CEO of Royal Ink Company. Murat Kılıçbay, one of the founders of the Islamic finance company, AGR and Sharia advisor. Hello, hi. A person who was one of the first to support our ETF on ITS. Asel Awilbekova, one of the famous bloggers on finance and finance market in Kazakhstan. Andrei Chebotarev, a person who is well known. When you start thinking of market in Kazakhstan, you always remember Andrei Chebotarev. And master of PhD candidate in finance, Kunikei Nurlan. really start with a topic, well, I'll try to ask some topics, to set some topics, and then you would volunteer without me pointing a finger at you. Otherwise, it will be managed democracy, yeah, like in school, like a teacher and students. Okay, let me start by saying that we have another topic of discussion, and I have been marking for quite some time, and a part of people, which I respected a lot, stated the following, that stocks cannot be sold. They are not bought, they are sold. In order an investor to buy something, then a broker should sell this to an investor. On the other hand, we see a boom of retail investment globally, with some thousands of traded tools, and all of them are being purchased by investors, and brokers cannot sell to customers dozens of thousands of these tools. And there are crypto industry where coins appear in the market and people buy without understanding what's behind, but this is well actively traded. Another topic, I would love to understand your impression. What is being sold and what is being bought? I mean, what today, in the current situation, in the retail investment, what is more important? Just to release a new product or make efforts that this or another product is actively traded? Any volunteers to answer this question? Okay, as we touched upon the crypto, yes, please share your insight, because from the perspective of crypto, I think all of us need to carefully listening and learning your experience. How this industry managed to sell it itself in this way, it's just a surprise. Yeah, you answered. Anyway. Well, as a matter of fact, a very interesting experience in crypto industry, because this is one of the industries which went through disintermediation, using the English term, full termination of financial intermediaries, because the concept of the technology, I mean, the way it operates, does not imply a financial intermediary, and those players in the crypto industry are directly onboarding their customers and directly sell their products and services to the customers. Binance has a set of instruments for institutional players. I mean, we work with banks, brokers, and other institutions, but as a distribution channels, more additional to a retail big business that we have. And the experience shows that everything should be sold, right? I fully agree with you. You do not sell a product for the sake of sell, right? And if you talk about tokens, that they're actively traded, hype things happen, a lot of information, space. But this is a deception, visual deception, because for each successful token, 100,000 failures, and we don't know about this. We think that everything is traded, everything can be sold or bought. This is wrong. And in order to make a token successful, you either should have some innovation component, bigger one, because not every token, there are meme tokens, and the majority we trade, these are tokens with some serious content meaning, and they require quite serious marketing, solid understanding of the community, working with influencers, key opinion leaders, and a wide range of instruments, promotion of the products, any products, financial, non-financial area. And because crypto industry went to different extremes, all these instruments, all these tools are used like 99%. And because of that, there is a wider coverage of the population, potential investors, traders, players in this market, only because of some mainstream marketing products we see high level of penetration. And in terms of value, every product and service should be sold. Yes, absolutely correct. Sure. Yes, colleagues, the floor is open. Go on. I would agree with Nurhat taking this opportunity. Happy birthday. This is the first time we see each other. Nice to meet you. And highlight of Nurlan and Nurhat, everything should be sold. In PIDAX, we added, we onboarded with Binance, we added cryptocurrency because the volume of crypto assets is estimated at $4 trillion. And the stock market is around 120 trillions. 5 years ago, looking back in the numbers, the crypto market was around 200, 300 billion. So without reaching 1 trillion, where the stock market was around $98 trillion. And crypto market is growing rapidly. This is why we decided to take this opportunity through PIDAX to invest into cryptocurrency, crypto assets, among other things. And through crypto assets, we developed the tokenization market. So we want to act as brokers so that from a unified mobile application, you can have access to different classes of assets. It's like an investment tool. Right. You are just expanding your product line and how customers can select where to invest. Right. According to statistics today, 97 or 98% of the turnover accounts for the stock market. For crypto, it's not been launched. It's accessible, but in demo version. Well, it's obvious that the stock market and capital market would be demanded. It would be high in rise. There will be 120% versus 84 trillion. Stock market, number one, then crypto assets, and then some other tokenization of assets. Right. Thank you so much. Let's give the floor to a lady. I see ladies want to take a floor. Okay, lady. Okay, let it be me. As we have this fight, I wanted to congratulate Nurhat. Happy birthday. Thank you so much. As for crypto, well, 5-7 years ago, all the people, I mean, the powers of this world from the United States were unhappy with crypto, saying it's ridiculous. Now, this year, we observe that some countries, they build their own reserve, including in cryptocurrency. What has changed in these years? Why people change their views, make a change of heart? For me, as retail investors, I have a few Bitcoins. I want to know what's behind. I mean, I understand if I buy stocks of Coca-Cola, this is Coca-Cola product, I drink it, McDonald's, I eat it, Apple iPhone, I use it. Crypto is not producing anything, it's not offering services, there is no physical good. What's behind it? What's the baseline asset? Why retail should look into the crypto? Is there any promises and what is based on? Nurhat, because of your birthday, please answer this question that nobody can answer. I'm sure that you are the one who can do this. Right. The whole panel session dedicated to Astana Finance Days. Well, you know, the message is that crypto is nothing, not being backed by nothing. I would disagree. The largest class of cryptocurrency that traders call altcoins is big infrastructure things. I mean, BNB chain token, BNB, and there is infrastructure of BNB chain, and it costs big money. I mean, people develop it, and there is a lot of applications built on it. By using this application, people pay money. BNP, they pay fees for transaction for having this BNB. I mean, this is an economic model which already exists, but maybe people did not touch it yet, did not comprehend it yet. This is the first part. Big infrastructure of blockchain, and in order to make it grow and build, there should be some economic incentives. Economic incentives are developed in a way through native tokens of these blockchains and ecosystems, which enable people to invest, and programmers can develop these ecosystems. The second component is the financial ease of money turnover. I mean, for me to send you one USDT, we should match our blockchains.
To use one infrastructure or to have a bridge between the two infrastructures. It could be a wallet on Throne, and for me, the other ones. But we need to have a transaction. So this is the bridge between these systems. There is an economic model with commission fees and other things. Why do people use it? It's our next question. Because it's convenient. Recently, I received a guest, a colleague from New Zealand. He wanted to buy the national headwear, but he couldn't use his card. And he sent me USDT, and I paid with my Kazakh card. So I got USDT with 0 commission fee in 1 second. So, but if he sent me 200 USD from New Zealand, it would be 2 days minus 10 or 20 USD, and a bank would convert it to tenge. So there is an economic model behind driving the demand for these assets. I think it will receive more penetration. Coca-Cola will maybe issue NFT, be on a blockchain, and there will be a demand for that. That's the answer. Is it too vague? I heard the same answer 10 years ago. But our panel will be a battle between conventional market and crypto. One more question, because it's a birthday. So I have fights with financial fraud. I got a lot of complaints when people transfer money to crypto wallets. They don't know where. What does Binance do globally? How do you fight how do you fight the fraud? Because people, they have all their savings in crypto, then they send money to someone, and then you can say goodbye to all the savings of your life. How not to become a victim of financial fraud? How do you find, how do you trace the footprint? Let me rephrase it. Financial fraud exists, and will exist for some time. And it's not a problem of Binance only, and cryptocurrencies as well. It's not a problem of banks or brokers. It's a problem of financial industry, problem of people. I've got a question. Why would anyone send money to someone else? That's the problem. It's not because Binance did something like have a safe track for the transfers. Why do people trust other people and send their money to third parties? For instance, they do it foolishly from one card of Halyk Bank to other Halyk card, for instance, by mistake. So in this case, the name of a person is known, but if it's crypto-to-crypto transaction, where to go? How can Binance say who is the beneficiary of this money? We'll do the same. We interact with the customers first. We cooperate with law enforcement agencies, prosecutor's office, anti-fraud office. I also get complaints about the unlawful enrichment, and then I have the same attitude. And all the stock exchanges have the same procedure. Customers would come to us, victims, prosecutors, law enforcement agencies, asking for help. We do the blockchain analytics, or we can track the token and its movement, and find the digital trace is easier than cash in a bank. Any token coming to our system and going out must be analyzed in terms of blockchain history of this token. So if there is a notification that this token was stolen or participated in unlawful activities, then it will be blocked. So there will be an investigation. We will let the source know that it's blocked, and we'll try to find the information about it, what is happening. I don't remember the figures, but I think it's like tens of millions of USD that we sent back to the victims of crimes. They were stolen, or they were victims of this fraud. When tokens came to Binance system, they were blocked and given back to the victims. Roman, going back to your question about stock trading, because we are having a battle, I'm a research officer, junior research officer. From my experience, I'm promoting halal finance, and it seems to me that traditional brokers are not interested in retail markets because retail customers live their own life. But our brokers, it's my impression that they're more interested in clients who are high net worth individuals. And the retail clients on social media invest money in some unknown brokers, Capital.com. And there are so many brokers. I'm having so many requests. And among those requests, there are no Kazakh brokers. Freedom is frequently mentioned, and that is all. And our brokers don't work with them. Giving, well, I do agree that brokers are interested in high net worth investments, but in our case, 98% of people who never invested in the capital market. Retail investors, well, their bill is very small. But do you work with retail customers? Of course, that's our main group. we have maybe just 20 high net worth individuals. And the other ones are just retail investors. For them, it's their first experience of investing on the stock market. And the check is so small. It's a mass market. This was our focus initially. But we thought that we'll get the share quicker with them, but unfortunately, well, it didn't happen. But there are brokers for retail investors. Maybe that's why we're here. So there are both categories, but we don't know each other well. So maybe we need to get together more often. All people live their own lives. There are many toxic products on the market, because of which many retail investors have debts, CFD contracts, a toxic product. But given the financial illiteracy, retail clients, they want to get money as soon as possible. People have money, but at the same time, brokers are interested in something else. And people lose money. So retail clients may have money, but brokers don't work with them. Paradox is an exclusion. They invite even bloggers to promote such products. And thanks to ITS, you issued ETFs with a small check, like $10. But I'd like to urge our conventional brokers, please start working with retail investors. Who is interested in retail investors? So many people. At least 10 hands up, besides Chingiz. So let's communicate better. It's like you're living in different worlds. I understand brokers who don't want to work with individuals, with retail investors, because they ask a lot of questions. And if they lose 15%, which is $15, they can really take a lot of working hours from the schedule of the financial consultants. So brokers, they are preferring high net worth individuals who have financial literacy and who are less susceptible to such losses. Well, there could be a person who is not a broker, but he has so many people with small checks, and it looks okay. It's a real point for growth, but just we need to think how to realize it. So he's got no infrastructure in comparison with the brokers. He doesn't need to pay salaries to the entire team, because a conventional broker needs to pay a lot for a lot of things, because it's an old market. And stock exchange means a broker, depository, and many other things. And the commissions are not so big. I think it's an economy of scale issue. It's not because of absence of intermediaries. There was a period in time with very stringent regulatory arbitrage between conventional market and crypto market. But I think that it's going down day by day. And in the years to come, because we see that some jurisdictions legalize crypto. That is true. So my question is about Islamic finance. Their penetration is very low, although there are Islamic banks and there are proposals to invest. What is the reason behind that? It's because Islamic products are not sold or bought effectively, because the growth of Islamic finance is very slow. Although our interest rate is 16.5 and deposits are of a big rate, and conventional, well, the interest rate is not big. So why conventional finance is growing faster? Halal finance is 0.14% in Kazakhstan. money that flow through the Islamic financial institutes. I think it's because financial literacy and religious literacy absent. Well, we have a lot of ethnical Muslims, but practicing Muslims are only 2.5 million, those who follow Islam. So 25% from the working age population. So 20 million people living there, 10 million people working age population, and only 25% of them practice Islam. Speaking of investments and classical products like conventional deposit, elementary things unfortunately are not known to people, to Muslims, so they lack financial literacy. Well, of course, we try to promote it, but in terms of investments, I'd like to say that from my work with the brokers ask, is there a market? Kazakh brokers, they ask us, give me the market, I'll prepare a product. Apart from PIDEX and ETS, who have real products that can be sold to retail clients. But classical brokers say, give me money, give me clients, and we'll do something for the market. But if there is a product and you promote it, the market will come. For some months, we are selling, but the sales are not high, frankly speaking. I'm not satisfied with its development. What could be the reasons? I think lack of information. Well, through our channels, we try to communicate messages, but there is a demand, there is a request, but information is not well communicated. For many practicing retail clients, the information just doesn't flow. That's why we don't sell much. And we need to shape the culture about halal finance for the market to develop. Let me add, I'd like to give a floor to Master, junior research fellow, had his word. I'm a practicing financial advisor. Why are you talking about my research activities? So, from our observations, I can say that there are just few Kazakh-speaking influencers. Even here, the content is delivered in the Russian language. Out of 2,500 Kazakh-speaking people, they are more interested in Islamic products, Islamic finance. And I think that the information is lacking because of the language of content, information in Kazakh language. This is my personal observation. It's like they are lagging behind 5 to 6 years. Even in blogging, Kazakh-speaking bloggers still sell, some kind of courses. The Russian-speaking bloggers already served their term in prison for that. I think that we need support from bloggers, from the state, in order to make the market of retail investors more dynamic. It all depends on the qualities of the brokers. If they put these requirements for themselves, if they make themselves a task to incentivize growth and interest, they can do so. Speaking of your question, an instrument must be sold and bought. I agree with that. As Steve Jobs said, clients don't know what they want before you give it to them. If it's a good product, high quality product, then first you need to sell it for people to buy. So you need to design it first. If we speak about cryptocurrencies, it's not the digital currency that is novelty. It's a technology that is valuable because it helps you to save money for infrastructure, It can save you money and time for transactions. As Bek Sultan said, the virtual assets, tokens, are used as speculative tools, but it has great potential. In Kyrgyzstan, I'm from Kyrgyzstan, by the way, there is a government regulation on legalization of assets being developed for the stock market, for the bonds market, so that they can be tokenized and offered on a single stock platform. And there are no limitations how much it could be fragmented. Stocks of Apple can be broken down into smallest parts possible so that you buy them, buy the pieces you can afford. Also, the real estate can be tokenized. In Kyrgyzstan, the stock market is not that developed. Therefore, majority of investors invest in real estate. Real estate has low liquidity. It doesn't offer you much profit. But then real estate could be tokenized and fragmented and be sold to investors. So there will be more opportunities for all the participants to invest in. So you can tokenize gold and other instruments. You can also tokenize Islamic finance tools.
Back in time, I was a developer of a regulatory framework on Islamic finance in Kazakhstan and on Islamic securities, sukuk. Why they do not develop this in Kyrgyzstan? Because there was a very heavy bureaucracy, because it's always two sides of a coin. On the one hand, you have to protect the financially illiterate population not to be deceived, and then to allow issuers to issue and recover the money spent. And then in our situation, two companies should be created to release this, to issue this security, and you cannot compete with conventional securities. Why this happens? Because the classical tools, they develop faster. Now we look at experience of other countries like Malaysia, Saudi Arabia, and the bigger part of these issuances, due to some reason, are placed through London, through the Netherlands, because the law written in a very liberal way, in a very robust way, and it gives chance to save some taxes, because in Islamic finance the bigger issue was because of double taxation. Because in every transaction there is a base asset that you need to buy and then sell to avoid this markup, which creates VAT and some other taxes. In UK, they did not write this down in Islamic manner. They just write down do and don'ts. They write down the rules with Sharia compliance without indicating that this was Sharia. And many Muslim countries use the laws of Great Britain to place their securities. I have a practical case to share. Today, you can look what's happening in US. So today we launched single stock ETF, and I want to ask a question to each of you. Do you understand this product? Is it needed, or customers do not need it? Would you recommend this or not? So what's your thinking on this? Congratulations with the launch. Yeah, it took you for a while to have it. Yeah, the product is needed because this fractional stock that costs expensive buy to cheap money, reducing the entry threshold, and they are not taxed, right? Yes, they are not taxed. But for Kazakhstan residents, yes, for non-residents. Well, they are not taxed for the residents of Kazakhstan, and these are stocks of foreign companies. So there are two great benefits. And of course, we're going to recommend this to our customers. I'd like to add that this would turn into the good alternative to paying stock, because paying stock are not promising companies, right? And we have people with little money, and they can buy and invest in into something big companies without buying a penny stock. The name, single stock ETF, is it scary for a layman? If you tell him, will he understand, or it should be sold in a different way? Well, if you say it's like a difficult sale, it would be easily understood. And this single stock, is it only fragmentation, or you have levers up and down, I mean the options? For now, just fractions without levers. I think that with levers it would be good, because somebody said, right, CFD and other, for retail investor, it's difficult. I mean, I've seen single stocks which are packed up and down with different derivative tools to either increase if it is a growth in return, and then fix in case of losses. So you setting losses and plus margin. Like an individual retail user or investor, I would rather find it difficult to do it myself. I mean, based on a particular paper, analyzing and putting all the orders in the right way. This would require research, and it will require real knowledge how to do this with your own hands, even if you use digital brokers. This is why I think that it's not about fractions or additional features. It would be easier to sell. And the value is, as a financial intermediary, that you can do this operational part and analytical part, and then sell the value to your customer, and he understands that it should be valuable, and the regular retail investor is not capable of doing this. Absolutely correct. But all these retail investors in Kazakhstan will never understand. This is for profit, for aces, which we have like in few dozen thousands. So it should be sold, because for a well-established audience, it's clear, yeah, I would not recommend, not because it's a bad tool. I'm not recommending any tool. I'm recommending one tool. It's a brain, human brain. Person has to understand what he needs and then find a tool. My job is to give advice. For a larger audience, I think we should advocacy, provide marketing and sell, explaining what is it, why it is needed. I would love to agree with the colleagues. I think that if we offer such a product, it will be difficult to make a decision, yes, that we need this, or we need this in this stock. I think that we need to provide assistance, I mean, on the broker side, or experts who promote financial literacy. There should be some combination. I mean, internally, do you feel the value of this product for a customer? Well, honestly, it's more a marketing story. I think it is more a marketing story. I mean, we should try. I mean, there is opportunity to buy like fractions of stocks via ETF, and talking to colleagues from Europe who are developing similar business, who spent a lot of money, you know, they say it didn't work, like play with money. It's for marketing. Yes, you can do something through the broker in the platform. And ITS, buying ETF, single stock. Inflow of volume and retail, no, there will be no such an inflow. I think this tool is very relevant, well, depending on how it is sold to the people who want to invest every month from their salary, save monthly. The cost does not allow to diversify in the form of portfolio and in equal shares, and this fraction lots will allow for this. If you have a salary of 2,000, you can add 500 and then divide it into 50 companies. In the second case, I would agree with Nurhat that promotion of the tool, if there are credit levers or it is possible to speculate this instrument, this would give an opportunity for people to try this market with low money, especially if they never traded before. In Forex, CFD, they say minimum deposit. If you are afraid of losing your money, we can open up a cent account. You can replenish $10, try yourself before it goes very well, and then start like real deal. In terms of fractions, you can use this tool in order to try this tool first, and then in the future you can raise this mentality of investing, that people are not afraid of losing their money, so they try and then become more bold. The question to colleagues: is there people in Kazakhstan who are really spending a part of their salary to invest? I mean, how many are there? I mean, building this culture, how it is cultivated. Maybe 1.5–2% of active population in the best case. It is based on the reports of KSC and other exchanges, which give some numbers on active accounts. 140, 160,000 active investors in KSC. And even if we multiply by 2 in AFC, this would be 1.5% of economically active population. Those on foreign brokers, they are not taken into account in statistics, right? Yeah, they are little. Yeah, few. Few. It is about people who understand, who know, because if you open up your account and then place money, it's not a trivial task. I talked to the people, there is a investors club, and people are interested in investment, and only few, maybe 5 out of 100 will have interactive, but this is little number. Well, they have very good capital. They are few, but high quality investments were made. I'm asking about those who every month spend their part of salary to investment. We have statistics. We do not measure every month. We just take quarterly, and we have 64% of users who are investing. They are repeatedly appearing on the third, fourth quarter. It's only within BIDEX. It means that there is no culture of investing a part of its salary. It's very, very small number. Okay, gender ratio. A question to ladies, men to women. Is there any difference? Maybe women are more inclined to invest, have more appetite to invest. In my portfolio of customers, the majority of investors are men. Of course, I wish there will be more women investors, but my sampling is small. We have more women subscribers in social media. Maybe because my content about the personal finance management, family finance management, not because, not just the traditional consumer behavior. We talk about single stock and everything. People do not know what stock is. I have a lot of subscribers, followers, top managers, directors. There is directors from banking sphere who receive private consultation from me. There was one of the venture investors. He brought his wife, and she's financier, and she doesn't know how to start investing. I think that there is a professional deformation here, and the majority of brokers think that people know everything, right? And coming back, why brokers do not offer service in Kazakh language? We don't have content. It's good that with your platform we're going to launch a project with Kazakh language to explain what is stock, who is broker, it is a person or a company. I mean, we forget that, like in Almaty and Astana, yes, right, there are more conscious financial illiterate people, but the bigger part of the population in Kazakhstan, Kazakh-speaking audience, they don't know what stock is and what is the capital market or securities market. I think that we need to focus more on this. And I would like to listen to the opinion of brokers from the audience. Why we don't have a Kazakh language content? Do you have any strategy or an objective in the nearest future, maybe? Okay, dear participants, Halyk Finance. Which broker is ready to offer content in Kazakh language? 2 hands raised. Great, super. Farhad, challenge accepted, right? Thank you so much for this comment. Very relevant comment. We're working on it. The work is in progress, and we work to translate this content because specificity of the material can vary from Russian to Kazakh. It's not word-by-word translation. These nuances should be taken into account as well. And we're running a very comprehensive work to change approach to Kazakh-speaking audience among our customers. I think that in the nearest future it will be quite visible. With your permission, Roman? Well, we are working already. We do not plan. We are already doing some work. Our initial content was in Kazakh language. We developed our Instagram account along with Russian. Apart from that, according to statistics, among attracted customers, around 30–40% are Kazakh-speaking audience. I mean, in a quantitative way. But in terms of quality, they are lagging behind indeed. A person is not aware. We have a lot in terms of number, but in terms of quality, very little penetration. To serve this audience is costly that we cover. As for the question was about female-male ratio. We have statistics. 52% are women, by the way. So you have more women loving you. I was supposed to ask a question in a different way. I understand now women are attracted by you. Well, we understood. Yeah, let's ask Asel. You have more women or men? 80% women, 20% men, in my case. I mean, subscribers. Women are very active. They're very active indeed, and they are investing rightly in the exchange market. The difference between men and women, we provide training to passive investment, long-term, low risk, and women follow the strategy strictly, like 10% every month, the same portfolio, and men start texting me a message, okay, trading, okay, option, we want this Disneyland merry-go-rounds. Men want more, actually. They are taking risks. They like taking risks. Maybe they lack some emotions in their life. As for Kazakh content, let me add a comment. We had a KazDev because my training course is in Russian and I had a plan to translate it into Kazakh. So we organized for 1.5 months KazDev, and we reduced our course by 3. So baseline course was 100 classes. For Kazakh, it would be 30 classes, training sessions, very simplified content, because investment literacy level is very low. We should start with basics, with fundamentals, explaining everything from scratch in a very simple, very primitive language. Roman, with your permission, I'd like to add, I fully agree with Asel. I was answering in the first part. The things like translation of application or stories in Instagram and so on, it's normal, it's okay. It's not that we are doing something from scratch. I'm doing what Asel is telling, and the gist of Kunike's comment, approach. It's not basic thing that we are duplicating in the application. No, it's already available in Kazakh. It's about approach to Kazakh-speaking audience and the content in Kazakh language, which differs from Russian. We all speak today Russian language, right? Sometimes English. This is having a point. I mean, this is a point I want to underline, that this moment, this aspect should be taken into account, and this is what we're doing in building the new approach to Kazakh-speaking audience. And by the way, as for breakdown, if you're interested in Halyk Finance, we have breakdown of customers. It's around, historically, it was like this in the past 5 years, 60% men, 40% women. So you have been loved less than... No, I think it's an average in Kazakhstan. Every broker, more or less the same story. 60/40, men to women. Wife is giving an advice and man is taking action. From my own experience, let me say that. You have many more or women? Answer this question first. Men more. Men more.
I'm a married man. From what I see, there is a trend. We speak about influencers and social networks. There is a trend among big bloggers. They sell trading courses. There was a wave. There was a trend for Kaspi, bank products. Now it's a trading trend. Bloggers sell such courses. 15,000 people may buy them. And people who buy such courses, I'm not speaking about the quality of the courses, but they exist. This is official statistics on Kase, but also there are housewives, Kazakh-speaking families. There are influencers who sell courses for housewives. It's like they position themselves as some kind of speculative trading, like buy gold under CFD contracts. A woman may sell an apartment, invest and lose money. I talked to one person who paid 10,000 USD on CFD contracts, and he lost 130,000 USD. There are many cases. Such investors live their different life. They don't talk to professional investors. That's my experience. Because influencers learned how to communicate according to a mentality of a person. Although researchers don't like this notion of mentality, it's quite vague. And influencers, they learned how to bring the interest, how to make people buy in. They use mentality, they share stories, they know the correct Kazakh words, which are difficult to translate. Maybe brokers can also warm the audience up. Maybe they can also study the behaviors of investors. Do you need that? Do you need to spend money for that? We just need to see whether we can use the tools used by these bloggers. We call them info gypsies. Well, it's about the responsibility globally. Financial consultant, well, in some countries, they have to be licensed. You cannot call yourself a financial consultant. Because if you give investment advice, you must be at least somehow responsible for that. So there is a thin line where blah, blah, blah ends and financial consultation starts. With responsibility, including financial responsibility, this line is very difficult. Sometimes, countries prefer the regulator to deal with it. Maybe we can have a good GR team to lobby for this, to lobby legislation for that. Many experts would love to go and get a license, because when you're a licensed financial consultant, you can collaborate with the banks. But now all the bloggers think that they're financial consultants. There is no initiative from brokers here. But it's great that we have conferences. Maybe step by step we'll come to that. And people are deceived by frauds. But once again, let me come back to my favorite example, Kaspi. It was a catalyzer. Maybe there will be an investor who can help here, because we really want a financially mature society. Colleagues, the wine is warming up. People are suffering already. Do you have any questions to us? I'd like to talk to our influencers, Andrei, Asel, Kanikei. On one hand, I'd like to express my appreciation and my gratitude for your work with retail investors to make them trade on the market. And I have a question. For the clients, you are like a frontline officer. You're on the front line. So it's you between them and brokers, financial system, who can realize their dreams. Is there any platform for communication between influencers and brokers? Because you are influencers, so you like put seeds into the investors' heads. So maybe you can participate in designing of a process, financial product, because it looks like there is a gap between what you do and what happens on the side of a broker. We would be happy to have dialogue with you, to be a platform, to hear what is happening to clients you talk to, what is the demand. There is no such platform. I haven't heard of such platform. Brokers have never talked to us. This is the first meeting of a platform. ITS just wanted our recommendation about the title of something to make it clearer for the people. Of course, I have a matrix with all the Kazakh brokers. It's like a map when you answer a question, and then you would find a broker for you. And when there is a question, are you ready to pay 500 USD? They say, no, we don't want it, 500 per year. So are you going to reduce the fee? Like 500 is too much. It's a question to Nevia. That's a useful meeting. Question about financial literacy. Do you know what will happen to single stock ETF in case of a split of a base stock or other corporate events? Of course, we would process it properly. So if Freedom makes a split 1 to 100,000, it will go down. So there is no. So it will be like also split by the coefficient of 1,000. But if it's too small, you cannot do a banking transaction. Well, Freedom wouldn't do that because Freedom stocks have already been fragmented. They split it. The stocks, when the stock is too expensive, to make it more affordable for retail investors. So it's hard to imagine that a cheap stock would be split. No, regulator or stock exchange wouldn't allow for that because stocks have their requirements. Like 1,000 stock can be divided by 100, but not by 1,000, because your example was split by 1,000. Single stock ETF could be like 1 cent, like at FRS. It's a great idea about single stock ETF. I've got one question. Have you discussed somehow with the regulator? Have you got any support? You are seeing that regulation of retail investment is getting more stringent. Even global depository notes, in order to have them, you must be a qualified investor. People who used to buy Kazatomprom, Kaspi, or Halyk stocks, if you haven't become a qualified investor, you cannot buy them. So not speaking of ETF. ETF, it's even smaller than depository notes. So splitting is being done to make it more affordable, but it will not be relevant if ETF becomes an instrument. So when you're a qualified investor, it means that you must have at least 40 to 50 million tenge. Of course, we discussed it with the regulator. We are existing in the framework of Kazakh regulation with constant communication between AFC and the Agency of Financial Regulation. So now products can be sold to private investors, so we do not expect the Agency for Financial Regulation. We don't think that it will prohibit investors from buying stocks at AFC. We don't see that happening. And ETF, Kazatomprom, is going to help resolve the problem you mentioned. My question is to Murat. First, an observation. Islamic finance have been presented as an abstract notion from this stage. And a potential investor, so it's 2.5 million. It's those people who practice namaz. But you probably need to divide it by something else in order to identify people who are ready to invest. It will be less than 2.5 million. But my question is it correct to identify this category in this way? Why Islamic finance cannot claim to have conventional investors. How would you sell it to conventional investors? What is better? Thank you for this question. Interesting question. If you speak about the pillars of Islamic finance, in terms of investments, there are limitations related to the main sources. All the derivatives are prohibited. You cannot do marginal trade. All the derivatives, now futures, options, CFD contracts, according to Islam, they are prohibited because they're highly speculative. There are risks, and for conventional investor, I think it's not interesting for them to use such tools. Forex or stocks trading. For conventional investors, the first goal is to earn money. Therefore, such limitations that are imposed by a religion, they're not very interesting for a conventional investor. In terms of general finance, like banking or investments, there you can engage not only Muslims, because there is a very clear positioning that these are ethical finance. So maybe there there is more inclination to invest in projects or business, issue securities such as Islamic bonds. Such products could be interesting for conventional investor because there is profitability, but also it's transparent, it's clear, and ethical. But I think it's a bottleneck for investment because there are certain bans, certain prohibitions that you have to follow, restrictions. I hope I answered your question. Now I'm having a course on sustainable development of UN, according to Agenda 2030. Representatives of UN say that Islamic finance is a good tool to address sustainable development goals of UN. The West promotes ESG scoring a lot. Any company that follows IOF standards is basically sustainable. ESG is equal to IOF. So if you have IOF certification, it means that you are sustainable. Your ESG score will be higher. So Islamic finance is for all, for the global investors as well. Colleagues, any other questions? I'd like to ask a question to Kassia. On behalf, well, there were today BCK Invest were showing the Kazakh securities going up and Kassia index. Well, people of Kazakhstan don't have big salaries to buy indices on the monthly basis. Do something in terms of legislation to have ETF on Kassia. For any Kazakh person to buy Kassia index without paying too much, like 10% of their salaries, because they would participate in Kassia growth. It's a request from retail investors from Kazakhstan. The laws must be changed because on Kassia there is no ETF. Change the law, please. It takes time. Well, theoretically, to protect Kassia, let me say, colleagues maybe can also comment. ETFs are published not by Kassia but management companies. So it's an urge not to Kassia but to management companies. In my experience, because we analyzed index of Kassia, there is an issue of replication. ETF main advantage is liquidity and replicability. but the structure is such that it's very difficult to replicate without a mistake. It's not a problem of CASE. It's a more complex problem. So we tried to address this problem by adding Kazakh securities into ITSW index to have at least some kind of replication of a Kazakh market in the global index. But now we have a limitation of 5%. We would rather have a bigger share of Kazakh market, but there are limitations because it requires replication in the moment, but if there is no such replication, it can kill the liquidity of an instrument. So, CASE, please make your basic asset more liquid. If you have a liquid asset, after that, there will be ETFs on a CASE index. There is such an ETF, but due to the reasons you mentioned, it's not traded. But we work on this problem. And I hope that we'll have such an instrument soon. Any other questions? So again, something about ETF in CASE. Freedom Finance wanted to have it. They registered it in Ireland, so they created it, but now it must be re-registered in the other place. We were asking for the brokers to trade on our platform and deal with this issue because stock exchange, although we desire that, cannot register ETF. It's not our mandate, it's not our license. It must be done by a professional market participant. Such ETF could be registered even according to Kazakh legislation. It wouldn't be called ETF. It would be called interval-based mutual fund, and its structure is not difficult to support, even with the current liquidity. It all depends on the size of the fund. Targeted by a participant. Given the basic assets liquidity, the liquidity of fund will not be excellent, but there is a task to develop liquidity for stock exchange and professional participants.
Even though the exchanges as well, so dear colleagues, if you have any desire and idea how to develop liquidity in our platform, let's do this together. Thank you so much. Question to brokers. So there was a news that Tayyab, Islamic finance company, placed Islamic bonds, sukuks, for 1 billion tenge. I think that this is the first tenge tool for retail investors, for halal retail investors. And the question to brokers, in your opinion, is there any demand for such projects, issuance of Islamic bonds? Is it possible to issue this? Question? Farhad left. Nobody is answering this question. May I answer? In 2017, the law was adopted. End of 2016, the law was adopted. In 2017, it was supported by bylaws. Many companies were very much interested in the issuance, but the market itself, I mean financial market, on the demand side, was not prepared. People do not know what stocks are, and sukuk, especially varieties of sukuk. There are a lot of different types of sukuks issued. 90% it's mudaraba and jara, because it is very close to conventional instruments. These two instruments can guarantee a return because it can be forecasted and then divided into months with specific income. But the problem was not the market was not ready, and issuers decided to go for banking tools, banking instruments. They turned into a competition in Kazakhstan. The banking system was started in 2006, Sukuk 10 years after. And the market is still underdeveloped and remains underdeveloped. In 2020, we received visitors from Islamic Development Bank, ISDB, about sovereign Sukuk, that Saudi Arabia investors are interested in high rates of return, and only developing countries such as Kazakhstan, Kyrgyzstan can ensure that. And if I remember, Kyrgyzstan decided to go for sukuks, but we did it just once, and the rate was higher versus conventional loan that Kazakhstan and Kyrgyzstan were receiving. Let me answer. As Kazakhstan broker, we are developing Islamic finance, so you know, on every security we demonstrate index compliant with principles of Islam. Number two, we have access to ITSS, which means the Islamic finance requirements. We don't see high demand. When we added ETF, when every stock was screened, it didn't go. I mean, there was no growth observed, but it doesn't mean that there is no market. There is market. It should be built, which means that the market is built by influencers like yourselves. I think Murat, Asel can do more. For retail, we have everything for retail. So we work with Kazakh language bloggers. Yerkebulan, who has 500,000 of subscribers, followers, but we don't see real good quality. No fee for $100 investment in PIDEX. $100 is not in a stock, actually. From the very beginning, no fee you can invest into security starting from $1. ETF, ITSS, it's around $8 to $10 only. Very affordable, very affordable. Entry threshold is low. We seem to provide every condition, but there is no market. And I observe that a lot of Islamic, practicing Islam, they unfortunately go to unlicensed brokering companies which do forex CFD. They started exiting market thanks to Murat. And it's kind of a sentiment to regulator if they're here. Well, as a matter of fact, the brokering business is a super low marginal business. Commission is LTV client from $100 to $1,000 maximum, and freedom only 1,000 FTB. And Forex, it's like a kitchen. They don't have license, and their LTV can reach $100,000, which means that they can, versus licensed broker company, 100 more times invest into marketing, promising high return, but it's about exiting the investment, no taxes paid. I think that in this case, 90% of people lose their money. So regulator should take responsibility and make actions, blocking such unfaithful brokers. I think that in developed markets, there is a practice when the retail investors are prohibited to sell products, CFD. I know they have it in USA. Maybe we should try this in Kazakhstan. I think that Forex is regulated differently in different markets. Largely, it is regulated business. Dear colleagues, well, I think that we did a great job. We talked a lot. Thank you so much. One practical objective has been fulfilled. We were thinking in our minds that some club should be created. I mean, the practical implication and finding and outcome of this panel, club of brokers and influencers, is created now. Let's boost it, let's build it, and meet regularly and communicate with each other more, because the majority of discussion was between the different visions and understanding sell side and those who represent the customers. Thank you so much indeed. Nurhat, happy birthday to you again. And you're kindly invited to continue informal discussion. The wine is prepared. Yes, go to floor 9. You are kindly invited to floor 9. Thank you so much for this conference. I think that